Ladies and gentlemen, welcome to the Midday Market Monitor. I almost said Midday Market Madness, but we're actually not seeing that today. Today is a good day, okay? NASDAQ is up 0.5%, the S&P 500 up 0.2%, and we have a lot of conferences to go over. In fact, we literally have the AWS reInvent 2025 going on as we speak. I can just show you
agent's application code. The policy evaluation actually sits in between your agent and all of your data and your APIs and tools.
This is mainly for developers. There's going to be some exciting partnerships and stuff like this that is announced. For example, AWS and Amazon that have been showing off some pretty cool new partnerships, like the NVLink Fusion that is going to be used pretty widely at AWS going forward for, some of their Trainium chips to like as custom silicon that's going to work alongside some additional GPUs, stuff like this. I can end up showing you guys this here really quick. Let's just switch over. The AWS reInvent is going to show off that NVIDIA's NVLink Fusion is going to accelerate the deployment of AWS's Trainium 4 AI chips, expand the portfolio with NVIDIA Blackwell Ultra and RTX Pro 6000 Blackwell Server Edition cloud instances, and integrating NVIDIA's Nemotron models with Amazon Bedrock. NVIDIA Cosmos World Foundation models are now available as NIM microservices on Amazon EKS. Yep. That was the some of the announcements from NVIDIA. It's just going to be a lot of this until the stock ends up going up. More partnerships, more increase on what's called partnerships and purchases, not just from AWS and other hyper scalers, but worldwide as well. I actually just saw this news come in from Vanguard. I wanted to switch over to this because I just think this is really interesting for sort of the BMNR stock talk, everything like this. BMNR is up 7.5%. Not only do I think, hey, that's a fun day. We're above 30 again. We like this. But what's more important is the fact that Vanguard, an $11 trillion brokerage, the second biggest brokerage that is around, behind Charles Schwab, is now allowing for Bitcoin ETF volumes. They are going to expand this to other crypto ETFs, all started today. In the first hour, they saw $1 billion of ETF inflow volume, okay, because they allowed that $11 trillion of client assets to start, well, essentially buying and selling these Bitcoin ETFs. This is going to happen for Ethereum as well and other, maybe Solana ETFs and stuff like this. It just sort of expands the total addressable market, right? SoFi did end up releasing to a very small cohort for SoFi crypto yesterday. So we started to see, I only saw maybe 2 or 3 people end up posting it on X that day. Today, I've seen probably 20 or so posts. It still looks like a very small rollout, but people are starting to get those emails. You have to have a SoFi checking and savings account and then a SoFi crypto account in order to fund and use crypto on the platform. In Q1 of 2026, E-Trade is expected to start opening up trading for Bitcoin and Ethereum and Solana and all of these things. That's going to be a partnership with Zero Hash. I think Zero Hash also got purchased by MasterCard. So there's a whole, huge investment from large financial institutions on these types of products. BM&R, I just don't see how they're misplaced. Some people are very excited about the Fusaka upgrade, like myself. I think it's one of those things where, so I'll tell you what the concern is from some people. Ethereum's Fusaka upgrade is essentially going to be increasing the block capacity and lowering gas fees, meaning that more transactions can flow much cheaper through the system while still keeping costs very low. Okay. The problem is, and why everyone is getting a little bit worried about this, is if you end up bringing down the gas fees, that's going to mean less burn. But Ethereum still makes up, whenever you're talking not just the dollar value of Ethereum, but you're talking about the actual, like, how much utility is flowing through that system, it's still extremely small versus the grander financial ecosystem. Okay. In order to get to that scale, Fusaka is not even going to be the last upgrade. Like, I mean, we're going to be talking about many cuts in gas fees and transaction fees. So then this becomes more mainstream. Okay. There's going to be many, many upgrades. There's also sort of upgrades to the actual, how do you say it? Like, authorization. Essentially, you'll be able to use Face ID or fingerprint ID as a way of saving your wallets and using that as a sort of seed phrase in a way. Instead of saving 12 words, the average person, my girlfriend's not going to get a nameplate with 12 words and put that in a safe and blah, 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 and, try to remember that anytime she goes to transfer her wallet from one place to another. You need it to be widely available for, her iPhone. And so to sort of grow to the next masses that, like, you have to expand there. I don't think that this means any sort of global coin or something like this. I think the way that Ethereum is going to be used is that they'll be tied to existing financial institutions. There was a post that I saw. Hopefully I saved it. Where was it? I didn't agree at all. It was sort of saying like, all of these companies are integrating with stablecoins and crypto is eating the financial world. But the companies that were integrating those stablecoins were, Fiserv and PayPal and Visa and MasterCard and Klarna and, like, just endless amounts of the existing financial institutions, JP Morgan, SoFi. That is the old guard. This is a technology that is strengthening the same players that were there, the day before. The companies that will not be fast to integrate and work with those products, they will die off. They will not be able to survive. Western Union, for gosh sake, is talking about a stable coin. Okay. So clearly it's real. Clearly, that I don't know where I'm going with this. Anyway, all I'm trying to say is that Ethereum's Fusaka upgrade, if you lower transaction fees, hopefully that ends up actually 10xing the total amount of volume, not just, what's the total amount of actual gas fees that gets paid to the system to end up lowering, or, the total supply of Ethereum. That is not the main bull case. The main bull case is how many people are actually using it. There's so much more growth that way. That's like saying DeepSeek was the problem for Nvidia. It turned out it wasn't. It just made those products 10 times more accessible, right? So yeah, that is quite exciting. The SoFi crypto stuff, I have some videos and stuff like this of it on the platform, but honestly, it doesn't look like anything that's even worth taking a look at. It looks like crypto on a brokerage. It's not really anything different from everything else that we've seen prior. So let's talk about some artificial intelligence. Or should we stay on the... I won't talk about Shopify for long. I know you guys don't really like that name too much, but obviously Black Friday, Cyber Monday happened again. And once again, Shopify is just proving that they are in a league of their own. Okay. They grew sales year over year up 27%. The market share growth that happened there in terms of, what Salesforce and Adobe ended up claiming for how big the grander sort of Black Friday, Cyber Monday was compared to what Shopify is seeing is like 5x higher. Okay. 81 million shoppers bought from Shopify powered brands. 15,800 entrepreneurs made their first sale. 136 million packages were tracked in the Shop app. 2.2 trillion edge requests processed and served 90 petabytes of data from our infrastructure, and handled 14.8 trillion database queries and 1.75 trillion database writes. By the way, the whole thing that we talked about them going down yesterday, the shops ended up staying up and sales were still calculated. Everyone's going to be getting their packages. It was just the admin interface that ended up having some troubles. Okay. So all the sales and everything are, still roaring. Okay. Now, there's a couple things that I wanted to see. I have not seen Brad Gerstner on CNBC just yet. I saw some small clips, but I haven't seen, the main parts where he's talking about the AI trade. I think that's about 8 minutes long. And then Nvidia's AI conference, I honestly think I'm just going to listen to it in completion. Okay. I think it's important for us to listen to. I have some quotes here that people who have already listened to it have said in terms of the $500 billion in bookings for Blackwell and the Vera Rubin AI chips through 2026 did not include any of the work that they're doing right now with OpenAI. It's not inclusive of what they're doing with Humane and XAI. It's not inclusive of their most recent deal with Anthropic. So obviously, NVIDIA did climb on that news. I think people are just simply, I've stated this so many times, but they're just wrong on this name. Okay. I came from a midstream. Welcome. I didn't know he was streaming this late. No, I'm here to talk about AI, Black Friday, these sort of things. Okay, let's listen to this Brad Gerstner clip because I have not seen it. If you guys already have, that's perfect. But I want to hear it. So.
You're the head of Altimeter Capital. You're a big tech investment firm. You've got top holdings that include Nvidia, Amazon, Alphabet, OpenAI, Microsoft, lots of others. So let's talk a little bit about what you're seeing in the tech economy, in the broader economy, and where things are headed, because there's been a lot more volatility lately.
Yeah, I happen to think that volatility is good, and let me tell you why. Yeah. We're coming up on the third anniversary of ChatGPT. We've come a long way fast. You've seen NVIDIA add almost $200 billion of revenue in the last 3 years. Yeah. Truly extraordinary. Transformational phase shift, super cycle going on in our economy. It added 100 basis points to GDP this year. But remember, this year we had 225% drawdowns in NVIDIA. It hit $90 earlier in the year on the DeepSeek scare, right? And so there's going to be volatility when you're early in these phase shifts, right? That wall of worry prevents the bubble that everybody's worried about. And when you look at the multiples today, take NVIDIA, for example, I think it's trading at...
Here, real quick, I'm going to have to put pause on this. I just saw that the Adobe CEO is stepping out to talk on AWS stage right now. I want to hear this. He's talking about artificial intelligence. So let's have a look.
Join you at this transformative time. We're clearly witnessing a golden era of creativity where AI is amplifying human ingenuity and enabling people to bring their imagination to life. Adobe has been at the forefront of this revolution. From the invention of desktop publishing to the origins of digital documents to groundbreaking advances in imaging and video, we're constantly pushing the boundaries of what's possible. It was actually our transformation to a cloud-based subscription model over a decade ago that marked the beginning of our relationship with AWS, because it was services like Amazon's EC2 and S3 that actually provided us with the scalable as well as secure foundation for Adobe's innovation. As we transition into this era of AI, AWS is actually helping us innovate faster with the core services that we need, as Matt said, to train models as well as deploy agents. And this allows us to focus on what Adobe does best, unleashing creativity across every facet of digital experiences for our business, which span business professionals, consumers, creators, creative professionals, as well as marketing and IT professionals. When it comes to AI for creativity, we're reimagining every stage of the process for people of every skill level. We do this with the knowledge that over 90% of creators actively are using creative-focused generative AI today. And to support them, we're infusing AI into Adobe Firefly, our all-in-one destination for creative workflows driven by AI. In our flagship Creative Cloud applications like Photoshop, and in Adobe Express, the quick and easy app to create on-brand content. It's just an example, our Adobe Firefly model that powers capabilities like text-to-image, text-to-video, generative fill, and generative recolor have actually been trained and are using both P5 and P6 instances with all the data stored in S3 and FSX for luster. These models have actually been used to generate over 29 billion assets and enable creators to create content with unmatched creative control. And our AI assistant now in Adobe Express helps users redefine their entire creative process using conversational editing. And these agentic experiences are now powered by our AI platform, and our relationship with AWS helps ensure that these agents operate efficiently and, more importantly, securely. When it comes to productivity, PDF remains the way that people consume information. Over 40 billion PDFs have been opened and shared with Adobe Acrobat, and every year more than 18 billion PDF files are created and edited by our customers around the world. Today, we're integrating productivity for billions of business professionals and consumers through AI capabilities, including an AI assistant. In August, we announced Adobe Acrobat Studio, a first-of-its-kind platform that brings together Acrobat, Adobe Express, and AI agents to enable users like you to work more efficiently with both structured and unstructured information. Our collaboration with AWS is absolutely key here, given Acrobat Studio uses Amazon SageMaker as well as Amazon Bedrock to access our and third-party models, helping millions of users research, strategize, analyze, and collaborate even faster. Adobe PDF is also a new offering that helps consumers and business professionals now collaborate with conversational knowledge hubs that are supported by the personalized.
I mean, this is more boring than the Brad Gerstner thing or the Nvidia thing. So I'm going to switch this off and go back. Okay, I want to listen to the Brad Gerstner thing. I thought they were going to be talking about some of the actual tools, but I guess that makes sense that they're talking about the relationship with AWS. I just want to hear more about some of the useful cases for artificial intelligence. But yeah, SoFi is pumping. You guys are so right. Let's we could take a look at that here too. Woo! Gotta love it. Crypto's coming. Crypto's pumping. It's a good day to have the first sort of rollout for crypto. It's these good days for Bitcoin. Can you imagine if we just started rocketing back up and we ended up finishing the year at like all-time highs and Tom Lee was right and SoFi got in at the right time? Like their users would feel super happy. New people are buying into these products the second that they get released. Like that could be a really interesting choice. Do you have a position in Adobe or CRM? I have a position in Salesforce CRM, but not Adobe. Yeah, it's not that I'm not. I just it's one of those things, right? I've been able to see the value of Salesforce. I used it a long time whenever I was working previously at that other institution. We used Salesforce there. I got to see it. It was unbelievable. I've been a huge follower of Mark Benioff for a long time. Like, I just really like the company and the financials. I don't know really anything about Adobe. I don't use any of their products. I like, similar to Microsoft, anytime that Adobe pops up, I actively try to avoid their products. I like Canva way more. There's other things like DaVinci or Filmora or something like this that are just way cheaper than the Adobe products that still offer a good competition versus Premiere. I don't know how much AI is going to, obviously it's going to make their products much better, but is it going to make other companies' products that are priced way cheaper, much easier to compete? So and plus I don't like their products. I don't like Adobe Acrobat. I don't use any of those things. So we'll see. Very sticky user base. I am a true believer that I don't think that B2B customers can ever be truly sticky users. They, if they find that there is a better product out there at a much cheaper cost, there should be some CFO to make that decision to say, hey, we need to get rid of Adobe. There's no, I don't know. I don't really necessarily believe that. Shopify up 6%. Yeah, because Black Friday, Cyber Monday sales were much better than expected. But I'm not anti-Adobe. Let's be real here. I'm not saying that that's a bad investment. It's just not one that I've been able to wrap my head around. Nor have I been looking at their financials or anything. I don't care about the product, so I haven't even looked. Shop Pay growth is so good. It is true. It is true. Get rid of Adobe and Microsoft Office, hard sell. I mean, yeah, I don't use any of those. I like Google Sheets and I like, other PDF products or Canva and stuff like this. So I don't use any of their products. After Effects is the only app that has no competition. I believe that. I don't even know which one would. Yeah, I don't know of any competition that is. Well, I'm sure DaVinci probably has stuff that's similar to After Effects, but yeah, After Effects is extremely big for them, I bet. What about businesses? It's 90% of the revenue. No, 100%. Adobe has the moat right now, but I don't know if that will stick if strong competition comes in. That's all I'm saying. I'm like, yeah. Let's talk SoFi rate here really quickly. So, as we know, they have a stable coin that's coming out next month. Crypto's rolling out right now. Oh, that's funny. Polymarket just liked my tweet. Polymarket, don't you know we prefer Cult? No, I don't actually prefer either one of them. But Kalshi, what is so funny, we actually got a lot of news. I have it here in my list of things I wanted to talk about. Kalshi raised $1 billion at an $11 billion valuation the other day. Tarek just posted this. It really blew up 18 months ago. Now they're at $11 billion business. Here's the reason why I would never touch that company at that valuation. Okay. Boom. Notional volume last month on Kalshi was finally over 5.8 billion. This growth here is disgustingly big. Okay. Crazy good company. Very, very exciting. Whenever you look at it this way, the way that they don't want to break it down for you is what percentage of this was Robinhood's volume. So we know Robinhood's numbers. We can end up breaking out these, for ourselves. October, they did 4.4 billion. $1. So there's a little bit of an interesting statistic here. $1 is one contract. One contract is 1 penny of revenue. Okay. So you can immediately see how much money they're making. $4.4 billion, divided by 1,000, they're making, what is that? $4.4 million in a month, $5.8 million. One, do I have that number? No. Sorry. Not divided by 1,000, divided by 100. 44 million, $58 million. There we go. I was doing my math wrong. 58 million in November, 44 million in October. But we also know that Robinhood's numbers ended up being pretty substantial. So in October, they did 2.5 billion contracts. That's running on Kalshi's platform. So 4.4 billion of this, roughly 57 and a half, something like that, 57% of their volume was Robinhood's in October. 58 billion in November. Robinhood said that they did 3 billion contracts in November. That's over 50%. Over 50% of Kalshi's volume is one customer that just bought a business, Ledger X, Miami International Holdings, that is not going to be using Kalshi's platform. The real winner here is not Kalshi. It's Robinhood. Okay? They just entered this space a couple months ago, and they're more than 50% of Kalshi's volume. I'm telling you guys, like, if I had to bet, I would bet that, like, maybe one of the most profound things that I've realized this sort of like year or maybe 18 months of my last investing has been owning the customer. I get absolutely reamed. And by the way, this is like, talk about me holding Nvidia as my biggest holding. They do not own the customer. So they are at risk of eventually being innovated away. Okay. So keep that in mind. But Robinhood has a ton of customers' money. They have the retirement accounts. People feel very comfortable transitioning some money from the checking account to the brokerage to prediction markets, what have you, and keeping that money on the platform. Kalshi, you now have to have a relationship with a bank, a brokerage, and a bookie. It's just harder to transition. Maybe some people would actually prefer it that way, but then you have to trust another company that they're not going to go down or go into debt or something like that. Not into debt, obviously, but that there's going to be some problems and that your money at that platform is secure and safe, right? If Robinhood starts to move away from Kalshi and go onto their own platform, not only does that help, Robinhood's take, and that they make more, but then they can actually fight on pricing. Then they can actually go against Kalshi and say, hey, they're offering you a contract per penny. We're going to offer you a contract per half a penny. We're going to be able to move faster. We are going to be able to, like, why doesn't Hood acquire Kalshi? Why would they? They're half their volume. Why would they pay 11 billion or whatever the premium is, 16 billion, nearly $18 billion to acquire this crap company? I mean, I don't want to, now I'm just being rude. It's not a crap company, but Robinhood made them popular. This growth here, these three last, like, September, October, November, massive bumps, that's Robinhood. Investors are paying in private placements on Kalshi. They're paying for Robinhood's success. They've got it all wrong. They have the customers. They move off platform. Kalshi ends up posting month-over-month declines. Investors are not going to want to pay $11 billion valuation for a company that ends up getting cut in half. The sort of market making that's happening on Kalshi. Oh, wow, look, like you can't have a market without this volume. That's why they partnered with Susquehanna. Susquehanna is the market maker. They will supply the liquidity, right? Half the volume here is Robinhood's. Anyway, I'm done. But that's essentially it. I would just like let's imagine Robinhood had $16 billion to bet on Kalshi. I just tell them to buy their own stock. Please lower your outstanding share count and invest in yourself. If you hold SoFi, is Chime worth looking at? Thanks for the donation, Rusty. I hold both. And Chime's a very small position. It just got cut. It got cut way too much that I think that there's an opportunity for not a I guess maybe a swing trade. I don't believe in them long term, but yeah. Calm down, mate. No. I can never. Okay, let's listen to Brad Gerstner and Nvidia. Wait, let me get it with audio.
23, 24 times fully taxed earnings on next year's numbers, 18 times on 20 year. Right. Our economy had added 100 basis in Nvidia anniversary of ChatGPT.
Volatility lately.
Yeah, I happen to think that volatility is good, and let me tell you why. Yeah. We're coming up on the 3rd anniversary of ChatGPT. We've come a long way fast. You've seen Nvidia add almost $200 billion of revenue in the last 3 years. Yeah. Truly extraordinary. Transformational phase shift, super cycle going on in our economy. It added 100 basis points to GDP this year. But remember, this year we had 225% drawdowns in Nvidia. It hit $90 earlier in the year on the DeepSeek scare, right? And so there's going to be volatility when you're early in these phase shifts, right? That wall of worry prevents the bubble that everybody's worried about. And when you look at the multiples today, take Nvidia, for example, I think it's trading at 23, 24 times fully taxed earnings on next year's numbers, 18 times on 27 numbers. That is not the stuff that bubbles are made of, right? I think the rest of the Mag 7 all trades somewhere between 25 and 30 times, maybe Meta's at 21 times earnings. So to me, taking a little of the gas out, having some of these conversations and debate, very healthy. And what I see out there right now is a tremendous amount of progress on the model side. But I think the diffusion, the rate at which this transforms lives, both consumer lives and enterprise, that takes time. And that's what we're seeing play out. We're seeing the debates about Nvidia versus Broadcom, Google versus OpenAI.
Well, yes, and that's what I was going to get to. Is the new version of Gemini better than ChatGPT?
It's terrific. It's terrific. Remember, a year ago, we were counting, Google out of the equation. I've said on Twitter and otherwise, we own Google. Yeah. I've said it's very difficult to pick a winner here. So you can own them all. You can own OpenAI and Anthropic. You can own Google and Microsoft. And I think at this phase, you probably should do that. I think Google's done an incredible job. Remember a year ago, Satya was saying, we're making Google dance. Mm-hmm. I think Sundar is making people do a little dancing today. Yeah. And so that's part of the competitive dynamic that I think is great for the country. It's what's going to keep us on the leading edge.
That's great for the technology spending. There are a lot of questions about what this means for the business world, too, for enterprise. Yesterday, Jensen Huang was on Squawk on the Street with Jim Cramer, talking a little bit about that deal that they did with Synopsys. And that was pretty interesting to hear how it's got to be able to be used by these big industrial companies to be able to really make the next steps. And Jensen made the point that I thought was really interesting, that 90% accuracy is okay if you're dealing with consumers. It is not okay if you're in any of these big enterprise issues.
That's right. That's right. Think about it this way. The machine that builds the machine, right? That's really what he's talking about. We saw that with Tesla and Elon, right? Elon used to talk about we can't get to where we need to get to with electric cars until we first build the machine. Right? A totally new way to manufacture cars that can drive down the cost. And that's what you see Jensen talking about, for example, in the design of chips, right? That you really imbue the entire industrial economy with AI. And all of those benefits lie before us. I think we're heading into a very significant productivity boom. I've talked about the golden age of margin expansion for a lot of industrial and other companies in America that can simply do more with less. Our economy is going to see that productivity tailwind. But it's never a straight line up and to the right, Becky. And so I think for people who are watching it, you've got to anticipate we're going to have volatility. I remember early in the internet super cycle, Google would be up 5 or 10% a day. Remember when Facebook went public, right? And then it broke $20 a share,
Yeah.
right? It broke issuance because everybody was worried, could they possibly monetize on these mobile devices? When you're early in these super cycles, there's a lot of questions, and that's where we are today.
You're talking about the winners that came out of that. There was a lot of volatility in pets.com too.
For sure.
Webvan. And by the way, those companies went bust.
And there are going to be companies in this cycle that go bust. There are 1,000 companies in Silicon Valley valued over $1 billion that are trying to raise money. It's not going to be equally easy for all of them, right? But I think that's part of the process of creative destruction, right? It's okay that that some companies aren't going to make it.
We talked earlier this morning about some comments from Masa-san, who said that he didn't want to sell his entire Nvidia stake, but he had to in order to be able to put it into OpenAI. You've got bets on both of those companies.
Yes.
What do you think about that?
I wish my bet in OpenAI was as big as Masa's, but
would you sacrifice your Nvidia bet for it?
No, like I said, Nvidia has been an extraordinary winner. We invested in Nvidia in December of 22, right after we saw ChatGPT. The stock's up over 10 times, 10x over that period of time, as the revenue went from roughly $30 billion a year to over $200 billion a year. And they just told us that we should expect a run rate by the end of next year of $100 billion. Mm-hmm. And this is at the same time that Broadcom is doing extraordinarily well. What Hock Tan has done partnering with Google to build out TPU 7 is extraordinary. That's going to force Nvidia to be even better. So I think we've seen a lot of winners, and you can see from the logos that Altimeter owns, our choice has been really to own a lot of the best names that are benefiting from this super cycle.
We also have talked a lot about Bitcoin this morning and the volatility you've seen there. Maybe volatility is not a surprise, but when you layer on leverage on top of that, as strategy has done, does raise a lot of questions. Do you play in leverage in your holdings?
No, we run very, very limited. As a hedge fund, we run very limited leverage. We certainly would not be levered Bitcoin. And in fact, I've commented on Twitter about it with respect to MicroStrategy. It works incredibly well on the way up. But I said I didn't understand the strategy. And when I can't understand something that somebody explains, time after time after time, that's a warning sign to me. And I think you're seeing kind of some of the unlevering that is occurring. Bitcoin this year is down 10%. Gold is up 50 or 60%. I hope we can dispel the myth, right? One is a risk asset and one is not, right? And so it doesn't mean that you shouldn't own Bitcoin. I own some Bitcoin, and I might be buying a little bit more, as it comes down. But it is a speculative asset that over time will have more and more utility. But we have to be honest with what it is today.
It will have more utility. Will it have more store of value features than you just discounted?
It's a great question, Joe. I think as it has more utility, as it's used more in the financial system, as it becomes a part of more and more endowments and sovereign wealth funds, right? That in and of itself becomes a self-fulfilling prophecy.
The philosophical thesis of why it should hold value because of the 21 million and
Right.
because of the unbanked that are living in countries with 20% inflation. They work, their ass off, and they put it in a bank, and it's worth half as much in a year. They put it in Bitcoin, it stays stable. Why isn't that working right now to hold prices higher?
Well, I mean, I think that what you've seen over the course of last year is a speculative rush into Bitcoin.
Yeah,
as we got the Genius Act, the Clarity.
Yeah.
Yes, again, of course, it's reset. I don't think, I think these are more likely approaching buying opportunities than selling opportunities. I do.
That's saying something at 87,000, because I saw someone earlier say that it could go to 60, and that sounds almost like the end of the world. But I mean, Bitcoin was $3,000 a couple of years.
I will stipulate this: it's all possible. It is a risk asset. You should treat it appropriately in your portfolio, because if MicroStrategy is forced to delever, if there's an unwind there, it could get really messy in the short run, which is probably why I would be waiting to see how this plays out.
But it doesn't go to zero, does it?
No.
Okay,
I mean, I think the black swan, right, is that somebody hacks, crypto, whether it's quantum or otherwise. There was some news out overnight about, Anthropic running some vulnerability tests on the blockchain. Those things, I think, will be important if this is to have durability.
Welcome back.
Can I show you guys something real quick? I was just using Grok, and I actually can't get over how bad they are. If I could short XAI, I would. I swear. This is the worst. I saw someone in the comments say something about Jim Cramer, but they spelled Jim Gym, and I was like, oh, that's funny. You know, I don't see it in chat, but whoever said that, please make yourself known. That was funny. So is Jim Cramer American? That's where it was, right? And so I was like, that's, you know, I want to see a picture of like a buff Jim Cramer, like ripped, just finished going to the gym. So I heard last time, I was like, okay, well, you know what? Everyone told me I used it last time. It doesn't source the internet. So I need to give it an image to show you, or to show them like who Jim Cramer is, because it's not going to know, because it's the dumbest model. So I said, make an image of Jim Cramer that is super buff. Keep the tie and shirt, but the shirt's ripped at the shoulders. Place him in the gym. What is this, dude? And then, why does it look like this? What, like, this is like ChatGPT 3.5 images. Like, I can't look at the fingers. He's fat. I don't even understand. It's not even remotely good. And then you have Elon Musk coming out and saying that, like, oh, you know, Grok 5 is like the closest thing that we have to AGI. It's like, dude, this is the worst model. We're going backwards. I used to make videos that were so much better than this. What is this? I'm not even trolling. Like, that is what they gave me. I can't get over it. Every time I try, I pay for the most expensive thing that they have. Like, that's super Grok. Yeah, if I ask ChatGPT to do the exact same thing, I'll probably do this. I'll post this into ChatGPT. No subscription. Okay, no subscription, free model, and I won't even give them an image. Let's see what they create. Because, like, I've lost it, man. Super dumb Grok. I should make another X post. I just think people think that I'm like I'm doing this and I'm waiting to get bad responses. Like I have some hit out on XAI. I just did it. I saw a comment in chat and I was like, oh, that's funny. I just, you know, I'll create Jim Cramer, like Jim Cramer. And his titties are out. What are we doing, man? It actually kind of makes me want like that's being powered by Nvidia tech. Like maybe I should sell my stake. I kid. Fed rate cut decisions still sitting at 87.2%. Because I am on the free version of ChatGPT, it's still just loading. But we are. I just took it. No image or anything. We'll see. It says get plus. I'm not. You know. We'll see. You can't blame that on a video. I know. I'm just joking. I'm trying ChatGPT. We will see. I just want the honest reactions. You know. Let's see. Grok is actually dead. Like I can't believe it. Okay. That said, look at this. This is literally perfect. That's exactly what I was looking for. Like shirt thing, big muscles, Jim Cramer, no source image. That's all I wanted. Just a funny little image. And then I was going to show you guys or post it on X or something just with the caption Jim Cramer. Like GYM Cramer. That's all. They gave me some fat version. I don't get it. Like, it's like, I I don't know what maybe it's because I trolled them or something. Yeah, that's it. Yeah, that was actually Steve. If Terry Crews was white, yeah. Okay. Let's go back to stocks. MongoDB, if we go to just today's thing, because, well, actually, I need to bring this to 3 minutes. They ended up showing off their earnings after the bell yesterday. Huge bump in the stock. And then that has continued to perform well throughout the day, up 23%. Credo Technologies, another AI name, up 14.4%. Bitmine Immersion, up 12%. Sharplink Gaming up 8.4%, Orbs up 8%, Ethereum up 7.8%. So a little bit of expansion on the multiple for BMNR there. Bloom Energy up 7.7%. There was a report saying that the sort of way that we are going to fill the energy need, they literally named Bloom Energy as potentially filling a large gap in, what the grid can supply to these data centers. So that was quite interesting. I think I should take a stake in Bloom Energy. I don't know if I have the gall. I don't know. Up 100% in the last year to date, up 373%. It's definitely expensive. 1,300 PE. I did talk about SoFi crypto. SoFi's crypto is launched. It did launch yesterday, but it is seemingly rolling out to a very small audience. Okay. Kalshi's co-founder, Luana Lopez Lara, becomes the youngest self-made billionaire in history, surpassing Taylor Swift and Lucy Go. Lucy Go. Yeah. Okay. Let's nice tweet here from rip.eth. I like this a lot. This is a great way to put things. So whenever we're talking about Ethereum, let's see who's been choosing Ethereum. World's largest asset manager, world's third largest asset manager, Europe's largest asset manager, and Europe's second largest asset manager, all launching tokenized funds on Ethereum. That is very interesting. Like, legitimately, Larry Fink, do I have the quote from him? Larry Fink said, tokenization today is roughly where the internet was in 1996. Growth will be faster than anyone expects. That was Larry Fink, the CEO and chairman of BlackRock, a $13 trillion asset manager. He's betting it all on tokenization. I don't know. I got access to SoFi crypto today. I got SoFi crypto. Okay, nice. Anyone else? You guys get an email that I got sent some emails about it. So it was just saying the wait is over. Crypto is now at SoFi. You have to open up a SoFi crypto account, open up a SoFi checking and savings account, fund the banking account, and then you can start trading crypto at SoFi. They're the first and only nationally chartered bank where individuals can now own crypto and bank, borrow, and invest all in one app. You have bank-level safeguards, including regulation and custodial standards now for crypto as well. They have education and in-app guidances to help as well, and instant money movements between accounts, like from SoFi Bank to SoFi Crypto, so you're ready to buy at any time. That is the email that they ended up sending out. Okay. They emailed me a link. As Canadians, I don't know where. No, you can't. I don't have a SoFi account. I'm talking about the American population. About 80+% of the people that are watching my channel right now are American. They must have waited to release on a green day. It actually started yesterday. Well, there were definitely people that had access to it yesterday. I don't know if they were, beta people or like on some sort of trust pilot thing. On some sort of pilot, not trust pilot. That's the name of the reviewing app. But yeah. From Portugal. Nice. SoFi S&P inclusion, we don't know yet. That'll be on December 5th that we will know. And then should be the 19th or the 21st, something like that we'll actually see entry. And then about 2 weeks after, within those 2 weeks, is whenever all the funds start to track SoFi in the S&P 500 if it does get added. Brazil, Dubai, Singapore. Welcome, welcome, welcome. I don't have any SoFi covered calls open right now, no. I was planning on opening some yesterday because I thought they were going to skyrocket up in price, but we're sort of seeing that in a delayed day here. Once again, they did hit another high for the day. SoFi did 30.42. This is a intraday high, not SoFi's 52-week high. We need to get back to 32.73. Okay. So just keep that in mind. AppLovin up 5.7% today. Centrus Energy up 5.7%. Oklo up 6%. A lot of these energy names. Amcor up 6.4%. Intel up 7%. SharpLink up 7.5%. Yeah. Solana up 10%. Let's see what's not working today. Iren, Xpeng, Lemonade, Beyond Meat. Beyond Meat actually holding up decently well considering, the crazy run that we had yesterday. To be down 4.8% after rocketing up in price, going like yesterday being at 95 cents and at one point 158, that's an insane move to only be down less than 5%. Markets know SoFi is about to be included in the S&P 500. I think that you would see a lot larger move than 4.3%. I don't think the market does know. I think that you would see a really big move if they knew. So on the initial, and by the way, it still is a low percent chance that we get in. So don't feel like if we don't get in that something is missed here. More likely than not, we get in 2026 and maybe even late 2026. Okay, but that's fine. This is not a short-term game. We're not like the real profit is not made in the short periods. It's about the company has to continuously, fundamentally perform. So we need them to continue to find new customers, find new avenues of growth, underwrite really efficiently. That is going to be the ultimate test of whether they go up or down. There's still a chance to get in, of course. Yeah. There's still a chance today, Friday, that they will get in. If that does happen, I definitely could see 35 coming. And then, to be very honest with you guys, I'm not trying to be a pumper or anything like this, but like there is a definite possibility that we just immediately go to 40 because the announcement happens, then the S&P actually adds it to the index, and then the institutions all pile in. Okay. That might end up happening by the new year. It might happen into January where we really start seeing that pump. I'm not saying by Friday that all happens. I'm saying over the course of the weeks. That's if we get in. but the amount of institutions that will end up buying will be huge. And then it's the following all of that is, well, just the realization of what that means for awareness. How many institutions are now following SoFi? How many new institutions are going to initiate coverage on SoFi? That means better coverage, not always being looked at as just a bank. Maybe more institutions end up trusting them for their credit, which means the loan platform business maybe picks up, maybe the sale of loans. SoFi at Work ends up picking up. Like, it's just great all around for business for SoFi to be included in a very, very prestigious list. We'll see. When are you doing a deep dive on Rivian? I don't know. I think like it would be nice to do something for the stock tank. But yeah, I don't know if I want to look into that name right now. I haven't really. I got to be real with you. I love my concentration in my portfolio. I don't know if I want to change it. Like, I'm still just head on with artificial intelligence. And if I do feel like selling any Nvidia, like if it runs up really quickly, I might just end up buying more things like Nebius or Amazon or Meta or something like this, just to get into other AI adjacent names. Maybe a little bit more on the Amazon and Meta side for the just the safety there. But yeah. Ascent said that there's substantial tax refunds coming in Q1 of 2026. I honestly, where is Chime on that news? Chime should have nice big green candles on that news. People don't realize that the tax refunds go immediately to Chime's customer and they immediately spend it. That's actually like, I bet you that's a little trade. I'm not a trader, so I don't know 100%, but for me, I think a little 6-month play on Chime is good for my portfolio because I think that Q4 and Q1 will be a very big deal for Chime. That alone is going to change the story. I think they get re-rated in the next 2 quarters. Did you guys see this news about Sam Altman declaring a code red at OpenAI because of Google's Gemini 3 release? I think that that's quite, exciting. Or obviously, I think them pushing off things like ads and some of these things that were going to make them a lot of money, which is what they said. Like, if Gemini 3 is so good and everyone is switching, well, then they are going to potentially push off making additional revenues or profit and push harder to make their product better, which means they're just going to be spending even more, digging themselves into a potential deeper hole here. That does sound a little scary, but good for consumers. Innovation drives a lot of great things for consumers. But yeah, internal memos show that OpenAI is pausing projects like ads and shopping to focus on improving ChatGPT's performance. Quite interesting. Tanner, have you looked into Grab? Not too much, no. But you said long-term Chime isn't good. I think that there's what I would call like graduation risk. That if Chime is successful in helping their customers build up their credit, helping customers increase their financial status, sort of break out of the paycheck to paycheck like hamster wheel, then you're almost preparing them for a new platform that isn't with Chime. If there's a day where a Chime customer goes, oh, you know what? I've improved my credit score 200 points here. I can actually get real credit cards. I can start building my financial life with better institutions. Those better institutions are SoFi. It's the same sort of graduation risk that Robinhood has had with active traders, right? Whenever you've been playing around with trading on Robinhood, there's been a lot of people that said, okay, well, now, like, I can't just do all my trading on mobile. I need a desktop platform. I need like a really good active trading solution. I'm doing a lot of options. Maybe Tasty Trade is what I'm needing if I'm a massive options trader. Well, graduation risk is a real thing. Can Chime develop new products? They want to get into custodial accounts next year. They want to get into joint accounts next year. They want to get into investment products. Now, they specifically said investment products and not brokerage. Makes me think that they're going to get into some sort of robo-advisors, ETFs, very, very low take rate stuff. I don't know. It could help them keep a much stickier audience, but it is definitely a concern. My whole family uses Chime. That's awesome. That's awesome. No, it's definitely a useful app, and I've got nothing bad to say about like what Chime is doing for society. I think like it is a useful product versus getting ripped off by a bunch of the big banks or seeing a bunch of these predatory loans from these lenders that are not trying to help you at all. I think Chime is a much better use case. Dave is another one that I need to look at, but yeah. Okay. What is the best way for a Canadian to minimize foreign exchange fees when US stocks are bought and sold? Well, one, you need a US dollar account. And then there's Norbert's Gambit, which there's like literal ETFs that are designed to help transfer certain amounts of Canadian dollars to US dollars. And then you just transfer them in kind to the US version of those ETFs. So, yeah. And then things like Wealthsimple, if you're transferring, I think it's like, I forget the number. It's either 25 grand or 50 grand or something like that. If you're transferring that much, there is no foreign exchange fee. It's only just the currency difference, which you're always going to pay that. No one there is a real currency difference. But you need a US dollar account. If you're getting tagged for selling US stocks, then you're using a Canadian account. Isn't Canadian money just monopoly money? Yes, that is a true fact. No, but yeah, almost every dollar I have is in US dollars. Right? The paycheck that I even make from YouTube and the course sales and all of these things are all made out in US dollars. Like I get paid directly in US dollars. There's no point to Canadian currency. Okay. You think SoFi hits 35 before end of year? I mean, it's definitely possible. I'm not really making any sort of options bet on that, however. I do pay my bills in CAD. Yeah. But I don't need to keep a lot of Canadian dollars in order to do that. And it feels a lot better converting US dollars to Canadian dollars than the other way around. You feel much more rich whenever you have to transition US dollars to Canadian dollars. Like, wow, I found 40% extra on my money. Do you live with your family? I live with my girlfriend. But if you're asking me, like, do I live with my parents or something? No. I have my own house. But, hopefully my girlfriend and I will start a family, and then I will, have that as my living. Got the notification for SoFi Crypto just now, Freddie? Just now? If that's true, that's pretty exciting. MetaMask introduces Transaction Shield, an extension of MetaMask's security stack. Subscribers to Transaction Shield will be guaranteed against loss up to $10,000 per month for any transaction we deem safe. Okay, but what's the cost for that? Because to me, that just sounds like any form of insurance. $10 a month. That sounds like a little bit of a ripoff. I think the reason why is that anything that is sent that is lost, they were going to deem it unsafe anyway. It's only going to be in the database of accounts that they know are with other brokerages or tied to other brokerages. So I don't know if I would. Yeah, for any transactions we deem safe. That is the I don't like that news, actually. That sounds like a ripoff. Guys, you need to see this, though. Google, this is really funny. Did you guys see this Waymo video of the Waymo that drove in the middle of a potential legal situation here? They just drove into a shootout. There's cops here. The bad guys are on the other side. Waymo took a left turn.
Waymo. Oh my God. Oh my God. What the fuck is that Waymo doing?
The Waymo just drove in. And yes, it did have passengers in it. It did have passengers, and but they're going to get you to your destination. Yeah, read the room, Waymo. Come on now. What do you mean fake? I don't think AI is there quite yet. Yeah, but a bunch of people are posting memes. You're on their phone. Cancel the ride. Cancel the ride. Oh, that's so funny. Okay. Now, do we want to also hear Brad Gerstner was talking about the Invest America Act? I think I want to check this out just because SoFi was a big part of this. Honestly, Brad Gerstner was like, if I'm not mistaken, the founding person that thought of this idea. But he didn't call it Invest America at the time. But let's go ahead and hear what this means, because obviously it's quite exciting for SoFi, for Robinhood, and many of the younger brokerages that want to potentially help your, kids make some more money. Yeah, they're the Trump accounts now. I think it was called Invest America, but he did not call it Trump accounts.
Tuesday, and in the spirit of giving, Michael and Susan Dell are announcing a $6.25 billion gift to be paid directly into accounts of 25 million American children. That works out to about $250 per child, and it's.
Can anyone get over Dell's wife? Her eyes
Designed to.
Like, it's crazy. Anyway, let's continue.
Accelerate the impact of Invest America. That's the new national program that gives every eligible U.S. child a savings and investment account that they can grow over time. Here with more details on that gift and on Invest America is Brad Gerstner. He's a champion of the cause. He's been talking about it here on Squawk Box and all over the place from the beginning. Brad, we can't believe you actually got this done. Congratulations.
It's incredible to be here, and incredible to be here on Giving Tuesday with this announcement. I mean, this is one of the largest gifts in the history of the country.
I think largest to children.
Right, largest to children. And by the way, Joe, it's not going to a charity that will then distribute some of the money to children. 100% of this is going directly into the private accounts of these children would have been impossible but for the passage of the Invest America Act.
I think what's important about this too, because I always thought it was a little unfair that it went to kids who were only born after a certain date. Like,
Right.
what about the kids who were born the week before?
Sure.
I love what Michael and Susan Dell are doing here, which is to say we're going to take care of a lot of the kids that were born
That's right.
before those dates, who are a little older than that.
And remember, when I first came on, the idea was to start with the class of 26, and then it would move forward with every subsequent class. And the president and members of Congress said, hey, why don't we expand it to every kid under the age of 18? But we couldn't afford to give $1,000 to every kid under the age of 18. So we're really looking now to the power of philanthropy, the power of corporations. There's an incredible joint letter out this morning from Senator Booker and Senator Cruz coming together, like in this day and age, that bipartisanship, saying that every company should contribute to these accounts. And I've already announced here, Uber and Nvidia, companies like T-Mobile and iHeart are all going to contribute to these
It's
accounts.
a Trump account. I mean, Booker, that must have been hard for him.
Listen,
swallow hard.
We're coming together on the National Day of Giving. This truly is something that we can all get united around.
Yeah.
And I will tell you this, there's tremendous support in the philanthropic community. Michael and I will be leading the Invest America Giving Council, talking to all of these philanthropists, right? On both sides of the aisle, in the corporate community, moms and dads, churches and synagogues. The magic of this is these are privately owned and anybody can contribute to these accounts. So it's unlike just a charitable contribution.
Right.
This is really a new direct giving platform that's universal for every child born in America.
I love the idea for this. How do you then make sure that kids understand what to do with this?
Yeah.
Because that's the question too. Is it seems like the easiest way to fix things: give money to the people who need it. How do you then give them the tools to understand that if I continue to invest in this, if I continue to put money aside, save instead of spend, this is where I'll wind up.
Well, the place you start is they actually need to be able to open their phone and see that they have a little skin in the game, right? If you don't have anything and your parents don't have anything, it's hard to get excited about learning about financial literacy, stocks, et cetera. Now everybody's going to have that. 30 states already require a semester of financial literacy. I expect, and you will hear some announcements in the months ahead about efforts at the state level, financial literacy threaded in public education, because now the teacher can say, open up your phone, open up your Invest America account. Let's talk about how what it means to own a stock. Let's talk about the compounding. Let's talk about what it would do if you added another $20 a month to that account. So I think it gives us a platform for literacy and education around finances that we desperately need in the country.
Go big or go home for Michael. That's I was thinking that's a lot of money, but he's doing all right. I think.
I mean, Joe, think about this. We have the Giving Pledge, right? I think we're one of the most, it's Giving Tuesday. We're one of the most giving countries in the history of the world, right? Think about Europe, where they had dynastic trusts, generation skipping trusts. Everybody was devising a scheme to hold on to the money. And yet in this country, we have so many people who said, I want to give away the vast majority of my wealth during my lifetime. I think that's unique in the history of the world, but it's very difficult to give away money at this scale.
Will 5 billionaires, and will Senator Warren say, wow, here's a good one, a good billionaire that's not a leech on society? Or probably...
I'm not going to go there today, Joe. It's the National Day of Giving. It's about a unity.
Let's give him some grief.
And we got people on both sides of the aisle who are coming together to support this. I think that's what you'll hear later today from when we're in Washington, D.C. We're certainly going to be meeting with folks on both sides. It takes all of us, every family, every company, every philanthropist coming together to solve this problem. And I think we're not only bottling up hope for every one of these kids, right, but we're aligning all these kids with the future of capitalism and the future of free markets, which I think is critical as we enter this age of AI.
Again, congratulations. I am amazed that you were able to get this done. So really, congratulations, and to see this continuing to grow.
Thank you for giving us a platform. I hope CNBC stays involved. I think that this can be, something that a whole new audience, right? A whole new feature we can talk to these kids about. Wouldn't have gotten done without us getting the word out there. But today is all about Michael and Susan. It's an extraordinary gift to the future of this country.
It will help if we start kids early on the benefits of free markets in capitalism.
100%, John.
I know you're not going to go, you say you're not going to talk about anything interesting, but I mean, we are at a point where 51% of our youth think that socialism is a better. We've got a mayor named Mamdani now in
that is a devastating risk to the country. Less than half of people under the age of 40 have a positive view of capitalism. But as the president has said, when you're left out and left behind, when you have no skin in the game, it's Peter Thiel's, famous tweet that went around over the last few weeks. When you have no ownership, it's a lot easier to want to burn the house down. But the fact of the matter is, when every one of these kids opens up their phone, sees they own a little slice of Microsoft, of Nvidia, it's a lot easier to get excited about capitalism. This is the first thing we've done in the history of the country. We're creating a private prosperity account for every child. They will all be in the game. The president's Main Street agenda, this is getting all of those people on Main Street, folks where I'm from in rural Indiana, who don't have anything, feel left out and left behind. This gets them on the side of the upside of America. We got to get everybody believing in the American dream again, and there's no reason not to. We have the most dynamic economy in the world today, but everybody needs to share in that upside. This gets them going. This gets that little snowball going. The $250 from the Dells is just the beginning. Once that snowball goes, we know that parents and others will add to the account. Savers save more.
Savers save more. He's a good egg. Yeah, no, I agree. I agree.
It is giving.
But one other thing that I didn't realize, dude, talk about good egg. Let the hair go, brother. I always see Brad Gerstner head on, and I always thought his hair was like, that's stress. I don't know what that is. That's pulled back. All right. No, I do think that he's right. It is absolutely scary that, the youth of today, like literally my generation and younger, hates capitalism. It is crazy to me. I think that it's fair that the people that put in the most effort are the most rewarded. But I don't know. Maybe I'm wrong. Yeah. It's funny, right? The young people very much do not want to. Actually, you know what? I'll drop this topic. I don't want to get too much into it, but everyone's saying ChatGPT is doomed as Gemini receives a wave of positive media coverage during its 6-day stint, but ChatGPT is still #1 in the App Store. Weird. You know what? I'm not going to highlight any difference here or get off on a different topic, but Shopify, who's saying this? Bro, you're a YouTuber. Yeah, I know. Yeah, I just did it. You can do it too. Isn't that funny? I love how people say that, like someone bestowed me being a YouTuber. I just, quit my job and then decide to put a camera in my face, and then people go, "Oh yeah, but it's easy for you to say." It's like, yeah, then you do it. You're probably in a better position in life living in America than me as a Canadian trying to break into an American market. I don't even think that I'm just saying that from a benefit of me being the most privileged or something. I just think, you know what? I've seen a lot of people who work very hard in life and they seem to get rewarded. Maybe I'm wrong. Well, no offense. I've seen his early vids. He had to grind to get here. No, I mean, yeah. Yeah, some of the old videos are rough to watch, that's for sure. I like when Tanner calls out his view. I'm not calling out, but I don't know. You guys put out these comments. You think I'm not reading them. It's like it's so funny. It's so easy to hate from far away. It's like no one would ever be this rude to me. Oh, well, this is not even rude. I'm not even saying that, but there are a lot of just nasty comments in chat. It's like no one's ever it's only like this because we're online. But yeah. viewership spike incoming. Well, that's a good thing because we're about to get into the most boring part of the stream. Have you guys seen the UBS 2025 Global Technology and AI Conference? That is something that I've been wanting to listen to. I heard some pretty interesting quotes from it, and maybe we can just pull from it, but I honestly was just going to listen to the entire thing. So let me know if you guys want to do that. It's with Colette. I honestly think like Nvidia is trying their hardest to educate how much of a advantage that they have over the rest of the market, and zero people are believing them. Well, I say zero, 4.5 trillion is still believing in them, but a large percentage of that is just people realizing how fast their revenue is growing, how much their net income is growing, the margin that they're taking in, and just making almost a value play on their name because it is at value stock valuations for the most part. Oh, of course I talked about SoFi. Yeah. SoFi is falling a little bit from the highs, but we ended up hitting 30.42 on the day. The general population just follows the headlines without knowing what they mean. Yeah, it can definitely be troublesome for sure. Becoming a YouTuber is not something everyone can do. I appreciate what you do. I'm new, but love what you're saying. Thank you. Well, I appreciate that. That's very nice. No, I'm not. Honestly, I do think that being a YouTuber is extremely easy. Like, I'm not even stating that what I'm doing is hard. But I think it's just sort of looking at like, okay, well, if you want to make money for the least amount of time, then find where you can have the most amount of leverage. One of the reasons why I was stopped being a financial advisor is like, okay, well, I can only talk to the people in my local area. Well, that seems small, or if I go on YouTube, well, then I can talk to the world's population. The internet is the biggest lever that you could ever pull. So get a job online. Tanner, not every job can be online. I'm aware, but if there's a lot of people doing it online, then the margins and the take go down. And then the jobs that are blue collar or in person or in factory work, the rates end up going up. So, yeah, I always think it's funny that whenever people are like, yeah, I mean, you would say that. It's like, I made these decisions. It's not communism. No one placed me in this role and said, okay, you have to do this. But yeah, the internet is your oyster. But you need the knowledge, Tanner. Many don't have that like you. This is your moat. Buy a book. buy a book and research. I've been doing it for 10 years, And one good thing too that I found about YouTube, if you have to educate other people, and to even call this education is a joke, but if you have to educate people or that's what you're supposed to be doing, then you have to do a lot more research yourself because you don't want to sound like an idiot. So what's funny is I find a lot of people actually do more research for their clients than they do for their own portfolios. That's what I realized. Like whenever you talk to some of these like portfolio managers, these people do not run their portfolios, their personal accounts, the way that they run their client accounts. They're working a lot harder for them, right? So yeah. You're my financial advisor and my teacher now? No way. I can attest to that. Yeah, it's true, man. I was in it. I saw it. Tanner, are you trying to rebalance, trying to raise cash, or looking at new positions for the new year? I'm not trying to, well, I'm not necessarily trying to raise cash or sell anything. I have told you guys that I've got some names like Airbnb and stuff like this, and my amount of positions that I've had has sort of ballooned. I'm now up to 20 positions. I want to try to get that back down to like 14. Having a hard time knowing what I want to cut. I've got names like Shark Ninja, which I love. I love that name. I love their products. I love all the partnerships that they're doing right now with, Tom Brady and Kevin Hart and all of these things, like just getting their name out into the masses. I'm really, really liking where they are. And Black Friday seemed to be a major success. I'm seeing a lot of people like just anecdotal posts online about throwing away their Dyson vacuums and getting a Shark product because not only is it cheaper, but a lot of people are reporting that they're much better. They are a little bit of a physical AI play, small robotics plays, vacuums, mops, stuff like this. There'll be other products that they end up making, and then eventually they're going to get into large appliances, and the TAM there is huge. So all of that excites me. But whenever I look at the sector diversification, I don't even think I want to be there. Like selling appliances and physical goods and stuff like this, I don't know if I'm looking for that type of diversification. I think I actually want concentration in artificial intelligence, in financial services. So Airbnb doesn't fit that for me too much anymore. Shark Ninja doesn't fit that for me anymore. By the way, Shark Ninja is like the smallest position in my portfolio. So I don't think I'm investing heavily in those types of names. Airbnb is bigger than people would think, but still, I have been trimming it back, and I've probably sold off like 30% of my shares in the last month or so. So in that way, I am trying to rebalance. Just bought a crispy. Nice. But I'm sure you're thinking of selling SoFi. Legitimately not at all. Like, I think we're on the cusp of getting into the S&P 500. We're on the cusp of additional rate cuts, and they're accelerating growth. There's nothing that I don't like there. But Tanner, how much money do you make? Yeah, not going to say that. I'm not going to say how much capital gains I'm paying. Okay. Too many people are staying loyal to a stock and holding it for too long. Set a target, take your profit, rinse and repeat. Gary, that might work for you, but legitimately, I promote the complete opposite. I don't believe in that strategy at all. I look into sort of that Warren Buffett version of thinking. A lot of the principles that I have in investing are rarely from myself, and I try to learn from the people that have a lot more experience than me. So, while it can feel, hard to hold on to a company that feels stagnant for months on end, and you're like, oh man, I should have sold that whenever the last run up had happened, and I could have invested in the next big winner. But you're never going to have 100%, hit rate. So you're going to end up potentially taking something that would have remained stagnant, and from time to time, you would have invested in something that didn't work. I think it is so hard to find companies, founders, business, models and strategies that work long term. If you have those, I'm in the complete opposite boat of you, Gary, where I would actually say hold them forever and continue to take, sell options on them and, enjoy a dividend. Like, there's still money to be made, but what are we investing for? Are we investing for redemptions and like how much cash that you're generating from these positions? Or are you looking at your total account or net worth? If you're looking at net worth, then compare the early days of Google, Amazon, Apple, Meta, any of those big tech names, and say, when should you have set a target, taken your profit, and rinsed and repeat those names? You would have lost 100% of the time. I'm not a trader. I am an investor. I don't think that people should stay loyal to a stock that their thesis has changed, okay? But I've been a long-term shareholder of Shopify. When has that thesis changed? They just proved that they put up 27% growth year over year on Black Friday, Cyber Monday. The e-commerce market has not grown 27%, which means that there are real losers. There are companies who are growing slower than the e-commerce market, and then there are others who are growing much faster. If you can find a name like Shopify, maybe it can get overextended, but there's only 3 reasons to sell a stock, okay? In my opinion. Not because you set a target. Targets change. Companies improve, you know? When would you have sold and taken profit on Nvidia? I know what Gary's going to say. He's going to put his price target at where the highest price was and then say, oh, you know, I would have sold at 212. Yeah, right. Okay. You would have said 4 years ago that you would have sold whenever the stock hit 50 and you wouldn't even be here. Shopify will hit $1 trillion. Hard to say that for many other stocks. And whenever it does get to $1 trillion, I'd still need to underwrite it to say, hey, is it worth me selling? Or does the sales that got them to $1 trillion and they're still putting up, you know, new growth, like maybe I wouldn't even get rid of them at $1 trillion because the fundamentals change. The 3 reasons to sell a stock are: 1, your thesis was proven wrong. It happens a lot. 2, the valuation of the stock gets egregiously expensive. Okay. And then 3 is that you found a cheaper stock that you think is better in your portfolio. So everyone wants to buy cheap companies, but the better opportunity is to buy a cheaper company. I know that sounds silly, but it's true. If you can match part 2 with part 3, saying, hey, I've actually been researching a company and this is a much better opportunity. They're in a growing total addressable market. They are fast growing. I actually think they're at a cheaper valuation than this other name that I hold. And this other name that I hold is egregiously expensive. Is it, you know, a possibility to sell a Palantir at $200 to go buy, you know, a Nebius or something like this that just got cut in half that's growing at 700% or something like this? I don't know. They are the 3 reasons. Once again, not my reasons. Those are Warren Buffett's reasons. I'll try to distill down for you what a lot of legendary investors have said. It's actually like how I've built, like, you know, the entire course that I'm talking about. It's like not a lot of my rules for investing. It's like a lot of the greatest investors' rule. Like, what does Peter Lynch say? What does Don Valentine say? What does Monash Pabrai say about investing? What do I know about investing? You know, you learn your own things along the ways, but the best way is just to watch the greats. I totally appreciate your response, Tanner. And to the extent I agree, however, you are 28 and I'm 62, so I'm not going to look to invest in something over 10 to 20 years. 1,000%. 1,000%. If you are 62, then your time horizon is completely different than mine. You know, but I wouldn't be investing in the sectors that I'm investing in if I was 62 either. You know, or sorry, I should say if I needed the money, right? Warren Buffett is investing with the exact same strategy that he had. Obviously, I mean, he's not doing cigar butts and he's not buying small businesses and flipping them. He's buying quality businesses. But those companies that he's holding, he's not planning on selling when he dies. Like, Berkshire lives on. So it depends on what you need. If you need the cash now, I would reduce your risk and not be talking about any of the companies that I'm investing here anyway. You know, Nvidia and BMNR and even SoFi and Robinhood, those are high risk names for needing money for retirement, if that's what your goals are. Mary with the $100 gifted donation. Thank you so much. I like your long-term thinking. This is for Netflix. This is my best long-term hold since 2010 until the thesis changes. Mary, with a 15-year hold. That's phenomenal. That's my type of investing. And I mean, you picked quite an amazing one. That's incredible. What's the return for is it macro trends that I can get a 15-year return, that I can pick 2 dates? What would be like a good website to do this on? Or maybe I could just type in a custom date. Yeah, I can just do that. 2010 to today. You were up 12,200%, Mary. Does that, on your original investment? That is just incredible. I just picked, February 1st, but I guess any time within this 2010s. I don't know when you started, but thank you so much. That's why Mary could give me $100. She's not worried about money anymore. That's phenomenal. Holy. But I want to get there one day. Like that's genuinely my goal, I want to be able to say, hey, you know what? I've held this company for 30 years. And hopefully even have purchased along the way. What I would like to hear from Mary, if they're still here, is that she's not made 12,000% well, I mean, hopefully she did from her original investment, but that she bought along the way as well. Just continue with that conviction along the way, because that, I think, is, the true moneymaker. You found a name and you've continued to invest in it along the way. My longest term hold is JP Morgan. I'm boring. I mean, you're rich is what you are. A lot of investing is boring, but hopefully that these types of shows and stuff like this and following along on the news can make it a little bit more sustainable. Okay. 18 years with Apple, says Steve. And Steve still is going strong on Apple. I know that 100% because I think he's donated more for Apple stock than anyone else in the community portfolio. So, Steve, thank you so much. 18 years in Apple, still has a high belief in it. Timmy Cook, let's go. Investing is fun. Wish I could convince my younger nieces and nephews. Yeah. I don't know. There's a lot of I don't really know how to start that spark. And I don't think it's an investing spark as much as it's a delayed gratification spark. I got addicted to it, and it's how long can you just do something without seeing any immediate return? And it sucks. Like, for every dollar that you invest, you can't use that money elsewhere. And then you see the down days. Like, investing is brutal. You're essentially going to work and you feel like that money is just disappearing away from you and you're putting it into things that might stay stagnant for a little bit. Like, that's hard. Working out is hard. For the most part, you just feel sore and it's hard and it is stressful on your body and you don't see any immediate returns. You don't know your organ health. You don't know your visceral fat is disappearing. You don't know the stress you're taking off your heart. Like, your financial edging. I mean, I think it's worse than that. Like, I think it's like, I don't know. I'm not, you know what? I'm not going to go on your analogy anymore, but Was it Buffett who said that you don't interrupt compounding unnecessarily? I mean, I assume so. That would make a lot of sense to me, but I don't remember that quote specifically. What else did Mary say here? I'm trying to see. You said you tried to add to your Netflix? Okay, that's cool. That's very cool. Let's I want to mod Mary. She's a long-term investor. We need more people like this in chat. Bang. And not anti Gary Price in chat either. I'm not like legitimately, I don't care what other people do with their money, and I hope that it's you know, making you a ton. But I just have a hard time seeing it that way. That's all. And I am young, so, you know, can't put an old head on young shoulders. I'm fully aware, like maybe one day I'll become a day trader. But honestly, I think from what I've been seeing, I think I'm just going to do a lot more of what I've already been doing. Okay. I went from studying viruses to disruptive tech ETFs to stocks. I'm here until I'm gone. Let's go. Tanner, you did call the hood top, to be fair. Yeah, but I've called a lot of things that haven't been right, you know? Let's give myself a quick pat on the back. I definitely called the hood top. It felt like 150 was way too crazy at the time. Even if that was pretty crazy. And then the chime sell-off, like that was practically the bottom as well. Those two were fine. But they're not always great. And I try not to get addicted to those sort of things or thinking that I'm some sort of oracle. Like I need to realize like those were complete luck. And I'm not some genius at this. I don't believe anyone is. I think the only thing that is guaranteed to us, like a good path to take, is patience. If you have patience, you will be rewarded if you're in good company, or in good stocks. And I think like you can find that. Well, right now I'm on BMNR. I don't know if that's this is a speculative name, okay? But I don't know how poor you're going to feel investing in Apple, Google, Meta, Nvidia, these types of names long term. So you guys prefer Google, right? Tanner, you're on a good path in helping so many of us along the way. Appreciate that. Now that I think is that a Warren Buffett quote? Transferring from the impatient to the patient. So is Netflix actually going to buy Warner Brothers? It is Buffett? Okay. Yeah, the only problem with some of the Buffett quotes, it's almost like the Winston Churchill effect, where it's like you hear a good financial quote and then you just immediately attribute it to Warren Buffett. Like a lot of the quotes that people attribute to Warren Buffett were actually Ben Graham quotes, Peter Lynch. There are a couple of these other guys that definitely had some good quotable moments, but are immediately just given to Warren Buffett. Okay. IRN down 9.7%, XPeng down 7.5%, Lemonade down 5%, Block down 4.2%. I guess that investor day did not do it for them. What happened though? That is a bold sell-off. Did they end up putting out a news or any piece of news or SEC thing? That almost looks like they're raising or something. Uh-oh. Data reveals that they put out a corrected. Oh wait, hold on. I think they put out a newsletter and then they put out a corrected newsletter showing potentially worse than expected Black Friday, Cyber Monday things. That might be what it is here. Data reveals a 10% year-over-year increase in transactions during the big shopping holiday or big shopping weekend as consumers backed local businesses. Yeah. The total Black Friday, Cyber Monday weekend volume was 8.4 million. They previously said that the total was 49 million. That's quite a correction. Oh, it's 8.4 million, not 49 million. Yeah. Legitimately, I'm not even joking. They put out a corrected and replacing thing. And then they said total Black Friday weekend volume was 8.4 instead of total Black Friday weekend volume being 49 million. So they updated the press release. Oh, sorry. That was only for the Chicago thing. So New York City was still 2.5 million and Atlanta was 13 million. So it was only for one area. Gotcha. Yeah, cool. I don't really care for Black Friday anyway, but or sorry, for Block anyway, not Black Friday. I do care for Black Friday, Cyber Monday. Gotta love it if you're in the e-commerce game. Yeah, where are my blockheads at? Is there any announcement at 2:00 today? What's happening at 2? I very much wanted to listen to the Nvidia conference that actually led the stock to run up to 185, but the amount of selling pressure in this name is just crazy. Back down to 180, bounced off 180. We're sitting at 181, up 0.7% on Colette. I'm not going to double down, but like, let's imagine me and my girlfriend have kids or something. I think I'm going to have to like name my son Jensen. If I get a daughter, Colette, I'll just go all in on Nvidia any way I can. If we have no more money left, we'll just start naming real assets after our kids' assets. Are they real world assets? How many of you guys have RWAs? Are they boys or girls? Ruben's a good name. Yeah. Or if I had I was also thinking if I had a girl, I'd name her Grace. Middle name Blackwell. Grace Blackwell Manson. Unfortunately, Tanner, the sell-off will keep happening with Hood and Nvidia. All right. If it's a girl, Vera. If it's a boy, Ruben. There you go. My name is Ruben. Well, there you go. You're destined to have some Nvidia shares. Call her SoFi. Call him Ironwood. How dare you? I mean, I'm a Google shareholder, but this is just disrespectful to my portfolio. Yeah. Charlie Munger Manson. Just like all the greatest investors. Like, how many of you guys have multiple middle names? Is that common? Maybe I'll give my kid like a few of them. He'll be the Charlie Warren Don Peter Manson, something like that. Okay, let's go ahead. I want to listen to this discussion. It is long. We do not have to listen to the whole thing. It's also quieter on the audio, but I think that it's important for us as investors to listen to this. We're also going to be listening on Fiscal AI. So if you guys want me to, while we're listening to it, we can look at different charts and stuff. So if you guys want me to look at some names, we can also do that while we listen. But yeah. All right. My dog, Kuda. Kuda's a good name. I have two middle names. It's tedious. I don't use them anywhere. Okay. Let's listen to this technology conference.
Good morning. We're going to get started here. I'm Tim Arcuri. I'm the semi equipment analyst here at UBS, and we're very pleased to have Nvidia. Pleased to have Colette Kress with us this morning. Thank you. Right now, Colette, there's basically two debates. One is whether there's an AI bubble, and two is the competition. So I wanted to address these one by one. So first, what is the market missing? When everyone talks about an AI bubble, what is the market missing versus what you see in your business?
Yeah, it's a very interesting discussion, as a lot of words really focusing on some very interesting thoughts regarding the supposed AI bubble. No, that's not what we see. What we see is 2 to 3 different major transitions happening in the market. And we've talked about these transitions in history that says, first, let's not forget the need to transition to accelerated computing. Most of all of workloads, most of all work done in the data center has been done with CPUs for years. But what our focus is on is transitioning that to GPUs. It's a necessary thing because there's just not going to be any improvement that we can see in terms of the other means of using CPUs. So that's one of our first pieces. So when we think about our outlook of, by the end of the decade, $3 to $4 trillion worth of AI or just total data center infrastructure, moving that together, probably about half of that is just focused in terms of the work, in terms of working on that transition. We're in the early parts of that. And what you're seeing, for example, is the hyperscalers, the very large CSPs as well. That is a very big part of the work that they are doing. So you are seeing them work in terms of revising search, revising for recommender engines, and revising for the overall social media. This is a very big part of what we are seeing today. There is also that transition that is going to be necessary for AI, including what you need for accelerated computing, and focusing on AI and agentic AI is moving in that piece. But keep in mind that it is only one part of what we see today, and we're going to see that continue to grow through the rest of the decade as well.
So of the $3 to $4 trillion that Jensen talks about by 2030, so that would include replacing all of the existing $1 trillion worth of data center infrastructure?
Absolutely can be. A lot of that is going to be necessary. How long will that take? But keep in mind, they're also growing. So it's not just thinking about the history. As they continue to grow, they are also going to have to add more and more accelerated computing into their work.
Got it. Let's talk about competition. So we haven't even seen a model yet trained on Blackwell. So everyone is a little up in arms about whether your competitive lead is shrinking or not. So maybe you can speak to that.
Yeah, so let's just talk about where we stand. We're very excited in terms of our Grace Blackwell configurations that we've put in the market. That's both the 200 series as well as the Ultra series and the 300. Today, you're going to continue to see more and more models come into the world. Those models are right now being built, and you're probably going to see them in about 6 months coming out in terms of the new models. What we did, and when we created our Grace Blackwell configuration, that was an important change that we made in terms of completing full data center scale. We refer to that often in terms of rack scale, but I think the important part to remember that was a focus in terms of extreme co-design that would be necessary, not with just one chip, but 7 different chips altogether, working to create what is going to be very important for both accelerated computing and many of these new models that would be.
Sorry, I didn't think that was going to cut my audio.
Good morning. We're going to get started here. I'm business.
Yeah, is 2 to 3 different major transitions. Just not going to be any improvement that we can see in terms of the other means of using CPUs. So that's one of our first pieces. So when we think about our outlook of by the end of the decade, 3, for example, is the hyperscalers, the very large CSPs as well. That is a very big part of the work that they are doing. So you are seeing them work in terms of revising search, revising for recommender engines, and revising for the overall social media. This is a very big part of what we are seeing today. There is also that transition that is going to be necessary for AI, including what you need for accelerated computing, and focusing on AI and agentic AI is moving in that piece. But keep in mind that it is only one part of what we see today, and we're going to see that continue to grow through the rest of the decade as well.
So of the $3 to $4 trillion that Jensen talks about by 2030, so that would include replacing all of the existing $1 trillion worth of data center infrastructure.
Absolutely can be. A lot of that is going to be necessary. How long will that take? But keep in mind, they're also growing. So it's not just thinking about the history. As they continue to grow, they are also going to have to add more and more accelerated computing into their work.
Got it. Let's talk about competition. So we haven't even seen a model yet trained on Blackwell. So everyone is a little up in arms about whether your competitive lead is shrinking or not. So maybe you can speak to that.
Yeah, so let's just talk about where we stand. We're very excited in terms of our Grace Blackwell configurations that we've put in the market. That's both the 200 series as well as the Ultra series and the 300. Today, you're going to continue to see more and more models come into the world. Those models are right now being built, and you're probably going to see them in about 6 months coming out in terms of the new models. What we did, and when we created our Grace Blackwell configuration, that was an important change that we made in terms of completing full data center scale. We refer to that often in terms of rack scale, but I think the important part to remember that was a focus in terms of extreme co-design that would be necessary, not with just one chip, but 7 different chips altogether, working to create what is going to be very important for both accelerated computing and many of these new models that would be coming to market. So we're very pleased with that, but keep in mind, it's just not related, or it is not anything similar to what you may see in a fixed function ASIC. It's very, very, very different. So today, everybody is on our platform. All models are on our platform, both in the cloud as well as on-premise. All workloads all continue to be on our platform.
And from what you see from the performance of these chips, what you see going on with ASICs and what you see going on with how much you're doing with racks and integration and scale up, do you feel like your lead is shrinking?
Absolutely not. I think our focus right now is helping all different model builders, but also helping so many of the enterprises with a full stack that is incorporating not just that hardware, but remember, everybody needs that assistance to transform their software. And our software platform with CUDA, all the additional libraries, are some of the best reasons why people continue to stay on our platform. That platform is one that is usable for a significant amount of time and actually gets better over time. You've seen our continued improvement in using our software and enhancing our software can give you an X factor improvement in terms of what you've seen in anything else that we have done. So we're going to continue working with that and watching customers use that capability to continue new models on our platform, but also maintaining all the same infrastructure that they have on-prem already in terms of working their models as well.
And I get the question a lot about how much of what you're shipping is replacing existing GPUs versus just additive to the existing base. And it seems like almost all of what you're shipping is just additive to the base. We haven't even begun to replace the existing installed base. Is that correct?
It's true. It's true that most of the installed base still stays there. And what we are seeing is the advanced new models want to go to the latest generation because a lot of our co-design was working with the researchers of all of these companies to help understand what they are going to need for their next models. So that's the important part that they do. They move that model to the newest architecture and stay with the existing. So yes, to this date, most of what you're seeing is all brand new builds throughout the US and across the world.
And I think Jensen mentioned on the call that there's still AI workloads being done on Ampere. And so can you talk about that? When I talk to some of these neoclouds and I ask them how much they're renting Ampere for when it comes off lease, they say it's for pretty much the same price. So obviously demand even for the old instances is still pretty high.
It is. We still see Ampere. We certainly see Hopper continuing to be used. That's very helpful for them in terms of their internal research that they do, their work that they are doing to fine-tune their models. They can, again, use it because you're backwards compatible, forwards compatible from the software. So all of that continues to work in the work they're doing.
Can we just talk about the profitability of inference workloads? And I'm wondering if you can speak to how profitable these inference workloads are for your customers and any anecdotes that can sort of help make the case for ROI. We always hear about ROI. And so any anecdotes that you can talk about, maybe as these Blackwell racks ship, what the ROI is for these inference workloads for your customers.
You should think about also what we're seeing already with the workloads and what is driving right now the advancement of more and more compute that we're seeing today. Why is that? So we had talked about earlier that reasoning models would be an important part of what model builders were building. It was not enough to just say you have a single response, but thinking about in terms of reasoning is a very big part of the models that were being built. So those are now coming to market, and you'll see more and more of them, again, on the Blackwell architecture. So what does that drive? That drives upfront in terms of they need more compute. Those three scaling laws that we've talked about are still intact for all of the different model builders and communicate in terms of that. So they're building greater and greater models in terms of that reasoning. And then what happens is more and more token generation. That unique token generation also had another piece to it that says you have more users. Now you have both more token generation, you have more users. Users are also now working in terms of, I think I could be buying that. I would absolutely pay for being able to do that. So now inference has moved not only to reasoning type models, but now there's a margin that is actually being created that fuels, again, more compute and more models to do there. So you've got a flywheel happening already in terms of how inferencing in the token generation has occurred.
Yeah, and all your customers on all their public calls, they all talk about if I had more compute, I could generate more revenue.
That's correct. More compute, more tokens.
Can we talk about this disconnect between some of the model builders don't have very much revenue, yet they are committing a lot of capacity to you and to the supply chain, and to some of the large hyperscalers who do have money to spend, but the model builders don't have a lot of money today. They have to raise the money. So how do you think about that as a risk to your business?
So let's first step back. When we talked at the very beginning here, really understanding that those hyperscalers are continuing to buy compute for their internal use and or the work that they are doing in terms of transitioning to accelerated computing. The model makers that are out there, you're right, they do need more compute, but just like all things, they're going to have to work through, have I earned enough in terms of a profitability? Can I raise more capital? And can I take a look in terms of additional compute that I would need? All of that is still in motion. I think it was helpful for all of the model makers to help us understand what is that vision, what are things in the future, giving us an understanding of the options that they have. And we'll be here to support them. But again, right now, a lot of our work is on today and the next year and the year after that to make sure that the right amount of compute, capacity, and capital is available for what they need today for those models. So it was more of a longer term aspect in terms of that piece. But again, our focus in terms of demand and supply, our supply and our demand is based on, do we have POs? Do they have the ability to pay in terms of the capital? That is, nothing has changed in that perspective.
Great. On that, just in that vein, can we talk about your partnership with OpenAI? You did announce this big LOI, 10 gigawatts, which by our math is somewhere in the range of $400 billion over the life of that deal. How much of that 10 gigawatts is actually locked in? I imagine maybe there's a gigawatt that you're planning to ship next year, but the agreement is more of a LOI framework agreement, and you're allowed to invest along the way. So can you talk about that?
Yeah, so OpenAI and our agreement with them, a very strong partnership, a partnership for more than a decade, and their preferred partner of their availability for compute needs that they have. But keep in mind, today, and our focus, for example, on our $500 billion worth of Blackwell and Vera Rubin is really based for OpenAI continuation of the CSPs who are helping them with the compute that they would need. So right now, that $500 billion doesn't include any of the work that we're doing right now on the next part of the agreement with OpenAI. So we believe
that does not include the $400 billion over the life of that deal. The $500 billion is not inclusive of the next part of the agreement with OpenAI. This stock is up 0.6% today on this news. Have we lost our minds? Like, I don't know, man. I'm having a real hard time stomaching how the market is seeing the rest of OpenAI. Like, to me, this is just, wow. I don't know. Okay, let's get back to it. It'll start right here.
We'll continue working with OpenAI. Yes, we still haven't completed a definitive agreement, but we're working with them. Their desire, which is focusing on how can I work directly? How can I work directly with NVIDIA in terms of how we build out our compute structure? So that's going to be in the future, and we're right now continuing that work to understand how we can help them through that. But keep in mind, right now, most of it, all of it right now is just with the CSPs in terms of what's we baked in.
So that slide you showed doesn't include anything that would be part of this framework agreement.
That's correct. That's correct.
And this framework agreement would be all direct to OpenAI.
That's their plan. They do want to go direct, but again, we're still working on a definitive agreement.
Great. Let's talk about your exposure to OpenAI and your.
How is this bearish? I don't understand. People are worried about TPUs, and they have like $900 billion of foreseeable future deals. Like, it's crazy. And by the way, that $500 billion doesn't include the Anthropic, doesn't include Humane, doesn't include XAI. I don't know, man. I think they're right, though. Whoever said that comment about anything that is remotely tied to OpenAI is negative news right now. And here we are at the early part of the stream, and I was showing you guys Grok's LLM, and then I threw up ChatGPT. That is a free version. So I compared Super Grok, which is their more expensive model. I compared that to ChatGPT's free model, and it was night and day, the images that they ended up showing us. Like, Grok is a piece of crap. And ChatGPT is one of the only useful models, even compared to Gemini. And I find Gemini is doing well, but still, whenever I think about like long context and which one do I have to prompt engineer less, ChatGPT is the one. Like, still for me, it's my favorite. I go in and I ask it just a simple question like I would a Google search. It already knows me. It will frame its future questions around the job that I do here. Like, I find if we're actually valuing each model by which one gives us the more appropriate answer, not just, which one does better in STEM, but, which one actually gives you the more appropriate answer, I always find ChatGPT is the best. Yeah, the main problem with Gemini is the memory. I was paying for Grok because I was an X user. I still am an X user, but I honestly don't tweet enough. But so some of that stuff, like to reduce the ads, you don't really pay because they're bundling in. I was paying to not see ads on X. I was paying to, that sort of stuff. And I was like, okay, well, if I'm already paying, then I'll just use Grok because it's, one of the best frontier models. It's not. It's gross. It's just bad. Okay.
Anthropic partnership. How would you contextualize your overall exposure to OpenAI, and then maybe how significant is your partnership with Anthropic?
We're excited about our partnership with Anthropic. Anthropic needing help in terms of more and more compute, and very focused in terms of also on our platform. So we are going to help them. This is, again, a situation through a CSP, and working with Microsoft, that's been a big part. Not only are they interested in terms of now for the CSP, they're also looking in terms of a 1 gigawatt in terms of the future to do that. So now when we think at all of those model makers, we've got all of them focused on our platform and working with us in there. So it's a great position. In the case of OpenAI, continues down.
Dude, how, like, did you not see the answer? This guy said, Tanner's the only person that complains about Grok. Literally everyone complains about Grok. I haven't heard a single person say anything nice about Grok in months. The only people that say anything nice about Grok are the people that like are getting retweeted by Elon Musk, and they're just like cupping his balls for everything that he does. Like, Grok's a piece of crap. I like Elon and the things that he's doing at Tesla, SpaceX. Grok can straight up go in the trash, dude. Did you guys not see my Jim Cramer image? Like, you can't make it up how bad that answer was. Yeah, JJJP is a little ball cupper. Amit and Steve do not like Grok. I guarantee you they do not. I'm the one sending Amit these responses every single time. I love Grok. There, you heard it. Cupper. We got a couple of cuppers in here. Okay, then I would like to do this then. Hold on. We'll get back to the Colette thing. I'm going to go to Grok, okay? You guys tell me what to write. You guys tell me how, like, for research, I get it. It is good. That's why I still use it. That part's good. But the fact that they don't even know who I am, like, look at this. This should have been fixed years ago. Okay. Someone in the comment section earlier said Jim Cramer, J-Y-M. Or sorry, G-Y-M. Like this. Jim. Make an image of Jim Cramer that's super buff, keep the tie in shirt, but the shirt ripped at the shoulders, place him in the gym. And they got his titties out. They have a dumbbell going through his wrist. Nothing has changed about the source image that I gave them. They just took the image and, like, I don't even know. They just took the image I gave them and they just gave him dumbbells. Like, it's beyond bad. This guy. Oh, It's me. I'm the problem. That's what he's saying. It's too basic. You didn't prompt it properly. It's user error. Okay, so ChatGPT, which I do not pay for, which today I'm going to pay for, because I'm the wrong one. Without a source image, which by the way, if you do Grok without a source image, it doesn't even know anything. Like we can do something right now. I'll just open this back up. Make me an image of Anthony Noto, the CEO of SoFi. Source an image from Google, please, so you know who I am talking about. I would never talk this stupid to an AI ever, but this thing needs it. And watch, it's still going to be like crap. I'm seeing you refer. Okay. Would you like me to edit? Just make a photo, please. Cartoon or realistic, I don't care. Thank you. Yeah, that's good. No, good model, guys. I'm glad I'm paying for this. They showed, who is this? This is the thing that you guys are defending. Oh, no. Grok's actually really good. They showed some random guy and then a random guy with glasses on. This is Grok that you're defending. I just did a live prompt for you. It must be the worst example of all time. Then another live prompt that we did, first try. I'm not curating this. I did this live on stream. Make me an image of Jim Cramer. I took the exact same prompt, and it gave me exactly what I wanted. No source image, nothing like this. You guys are making me out to seem like I'm after Grok here. I'm not trying to be picky. I would love for Grok to be great. It's the worst thing. Like, I cannot make this up. That's exactly what I wanted. I just wanted a fun little image to post on X. Maybe generating images is not their thing. They don't even know who I am. Okay, so I haven't tested this, but we can... I tested this a long time ago. Let's test memory really quick. So I'm going to make sure that in the settings... and also that they're not leaking. Like, I don't want to leak any of my information here, but under data controls, okay? I'll show you this here. I just don't want to leak like my location or something. Under data controls, personalize Grok using X, improve the model, personalize Grok using conversational history. It knows who I am, okay? Because I've told it. Now, let's say, who am I and what do I do for a living? Gosh dang. Okay, wait. I'll fix it. I'll fix it. Anyway, it was right. All right. That was fine. It called me Lori before. But that's what I expect. I expect that answer. Proved wrong. I'm not. It just has gotten a little better. Did you not see the Anthony Noto post? It did the most basic thing. Okay, now we're past level 1. All right, it got a little bit better. But I'm just happy I'm not Lori anymore. Grok doesn't track you. You just watched it. I went to the thing. Like, it knows my X account. It should know exactly who I am. Never seen Ned Flynn. I get this mad every... You guys are making me mad just saying I'm not mad. It's a very low bar to pass, of course. So we're impressed that because it can read your past chats. No, you shouldn't be. I'm not trying to prove user error. Yeah. The whole point of large language models is that you should be able to misspell, type whatever, prompt incorrectly. You might not get the best response that you're looking for. But whenever you have such a low bar for what you wanted from the thing, I just wanted it to say my name. It said my name. All right, it passes that test. But who is Anthony Noto? What we just tested a second ago. It's like, are we still forgiving that? Let's be real. Are we still forgiving the buff Jim Cramer? Are we forgiving this? Like, I don't even understand how it can do this. Make an image that is super buff. Look at his titties. What are we talking about here? What is this? This guy's got gynecomastia to the max and like nipple hair that's coming inches off. Like, what is this? It does look a little bit like an Alex Jones. Like, I could see Alex Jones looking like this a little bit. He's supposed to be at like a gym or something. His fingers are all messed up in like, this is the worst model possible. Like, okay, I got my context wrong. Get the hands right. Look at sad Jim. Gosh, I'm so easily baited. You guys know it sucks. Okay, it got my name right. Thank gosh. I do like Uber. Uber's cool. Gemini might not know who I am just because I don't use it often. But create an image of Anthony Noto, the CEO of SoFi. And then I'll go to ChatGPT. They're all going to get it right 100%. I've got 100% certainty in ChatGPT of Anthony Noto, the CEO of SoFi. Gemini did not get it right. They did not. They've turned this man into Anthony Noto, the CEO of SoFi. They forced him to be it. That doesn't make him him. Tanner, stop using the AI bubble websites. That's funny. Okay, so ChatGPT, it doesn't look a lot like Anthony Noto. What's the name of that CNBC guy? But there's some bits of Anthony Noto in there, but also wrong. ChatGPT got number 1, Gemini number 2, Grok put up some sort of Hispanic / Indian dude and showed me 2 versions, one with him, one without glasses. Clearly number 3. Do the Kramer prompt on Gemini. I got to go grab it. Because I want to make sure it's the exact same one. Oh, it's not letting me. Okay, well, ChatGPT is acting up. So short ChatGPT as well. Okay. So the prompt was make an image of Jim Cramer that's super buff. That's super buff, keep the tie-in shirt on, but the shirt is ripped at the shoulders, place him in the gym. And it'll just be on the fast model of Gemini. Loading nano banana, we'll see. I should start trying more of the like Kimi. I haven't used them before. Gemini is not. Gemini is a. I didn't give it a source image. Okay, to be fair, it's definitely a dude that's ripped with a tie on, shirt, everything like this. But that is not Jim Cramer. Yeah. So I think I just downloaded it. Okay. Let's see. More like this, Jim, please. We'll see. Remember, though, ChatGPT, I did not give the source image to. I'm giving you $20 until you have a full share of Vertiv. Thank you so much. Okay, this is just terrible. Honestly, ChatGPT, whenever you're talking about the most just like it does what you want it to do, it's it. It gave me a photo. I said, more like this. And it said, oh, you meant landscape. Okay, I'll make it landscape then. No. Can you not make an image of Jim Cramer? Maybe it's doing that thing. Yeah. Okay. That's what it's doing. I was worried about that. Is that it will not actually create an image of Jim Cramer, which has been some of them. ChatGPT has been known to do that too. They don't want to, if it's not a nonfiction, or if it's a non-fictional character, then they won't replicate him. That is a thing too. And I hate that. And Grok actually will, like you tell them to do anything, they will do that. That part is cool. No, I know it's the wrong model. I'm trying to compare the most expensive models. Jonathan, brother, thank you. That should be enough though, right? How much is VRT these days? 181, brother. Do not give me $180. You're good. Speaking sarcastically, the AI doesn't work. I find it does. Well, at least with ChatGPT, you just talk to it like it should understand like regular language. It's trained on sarcasm. Like it should. That's the whole part. For example, I had a bunch of usernames and passwords that ChatGPT refused to organize for me because they were all sensitive information, but Grok did it with no questions asked. I believe that. There is a bunch of small things like that like Grok does not care. They're not worried about the woke stuff, or like that part is really useful. Jonathan with the $40. VRT. Okay. I'm going to be buying it regardless. I'm buying $80 worth of VRT regardless. Don't you worry, my friend. Thank you again. Seriously, you've been a huge supporter of the channel. No more AI pictures. We were just listening to Nvidia. You're right. We can go back. Let's check on the markets before we do. I'm just having fun. I'm chilling with the boys, chilling with the friends. There's a growing female audience, so I can't say chilling with the boys anymore. MongoDB, unless the girls want to be the boys, in which, welcome to the cult. But yeah. AI is going to overheat. Hey, every time that you put a prompt into any of these AI models, you're pumping Nvidia shares. All right. not making much revenue for those companies, but yeah. The more you test AI pictures, the more I see a bubble. Dude, you know what's funny is whenever you start to think about, like, this is just me on my computer for 1 second, there are APIs that are creating images. Like one of the things that Nano Banana ended up showing off, which is Google's model. This is pretty cool. Wait, here. This is very cool. So they said, you can adapt the prompts to pull in live information like transit details. So the prompt, present a clear 45-degree top-down isometric miniature 3D scene of the London Underground. At the top center, place the title Central Line in bold sans serif text, a train icon beneath it that says the service status. But it doesn't say what the service status is. It just says, please include the current status. The current status is minor delays. Okay. So think about this. If you're talking about minor delays, this image is only useful for potentially minutes at a time. So you're going to need to continuously create more and more and more images. Jonathan, brother, what's going on? 10 more gifted. That's $50. Thank you so much, brother. That's seriously greatly appreciated. But I'm showing up here at noon regardless. Thank you. But yeah, I think it's very interesting. Think about how these images are going to be used for potentially bringing in live data. Instead of just looking at an Excel spreadsheet, we can pull the data from an Excel spreadsheet and actually make something that's visually appealing. Like we talked the other day about Meta essentially making every text, photo, and video for personalized advertising be made directly for an individual person. You're starting to see this. This is not directed advertising, but very specific to current data that's flying in. So we need to constantly adjust. So my couple of photos that I created using Gemini, Grok, and ChatGPT are nothing compared to the projects that are going to be created going forward, that are going to create millions of these per second. Jonathan with another 10 gifted. Brother, I'll buy the shares. How many shares? You want me to do a like a Vertiv deep dive or something? Is that what you want from me? Is that what I need to do? Maybe I haven't done much due diligence, so I don't want to say that I can do anything for this Friday because I'll need a little bit more time to look into the name. But maybe like the 12th or something, like next week, I can look into the name and do like a fiscal Friday on it. How about that? He must like your stock picks, I guess. Yeah, the whole chat's turning green. Now dance. No, it's too funny. Okay. Been holding Vertiv all year and it's my best performer. And aren't they like not even in the S&P yet? Didn't I hear they're not in yet? That one I might just have to look into before Friday, maybe. If they're going to be getting in here. Jonathan, thanks again. Really do appreciate it. It's a very nice gesture. BMNR. If you're asking about where the stock price is right now, we're up 12.3%. They hit a new intraday high on the day, 32.60. Yeah. Ticker symbol U promotes VRT. I don't know if he promotes it. Well, I also don't know. I guess he has promoted ticker symbols in the past. But yeah. Great channel, Tanner. Thanks for the content. Jonathan, thank you so much. Okay. What's the short pitch for VRT? Just tuning in? I've got no clue. But my rich friends want me to look into it, so hey, got to do it. Why is crypto running? Let's take a look. ETH, well, 3,000. It's funny, right? The small recovery back to where we were before is, I mean, it does look like running, but still, it's crazy whenever you zoom out a little bit. Like we touched yesterday, what was the price? 83,000. Was that the low? 83,800. And then next day, 92,000 on Bitcoin. That's crazy. You guys want to make a quick $9,000? Buy one Bitcoin yesterday. Yeah, there was a lot of not just oh, my camera died. Oh, okay. One sec. Have I been streaming that long? Okay, one sec. I've got a couple batteries. Coming back. There we go. Cool. Yeah, AI got him. Dude, my camera is plugged in. I do have it plugged in, but it just drains faster than what it charges at. That's Sony for you. All new Nvidia chips require liquid cooling, so I guess we believe in Nvidia. We believe in VRT. Ah, interesting. Okay. If you want to make 30 grand, buy 87,000 worth of pudgy penguins yesterday. Nice. No, I actually don't want to make 30 grand if I have to buy pudgy penguins in order to do so. But Bitcoin and these sort of names, or especially Ethereum, just my personal bet. I do feel confident in investing in, I'm up 12% on my BM&R stake now as of today. We'll probably lose it tomorrow, but today we celebrate. Tanner, you need a dummy battery for your camera that plugs to a power source. I don't know what you mean. I have, I don't know if you can see here. Well, I can unplug it for a second. It's all dusty, but I've got this, which is just a bunch of camera batteries that are always sitting plugged in. So I always have two charged and ready to go. And usually they last, I don't know, 4 hours or so of continuous streaming while it's plugged in. But yeah, I think I actually plugged in my camera whenever I started this stream at like 28% or something. So like we're doing fine. But yeah, I don't use a webcam. I use like a Sony EVZ10, something like that. Sony EV, something like that. I think it's Sony EV, something like that. Am I wrong? ZVE10. And then I have a Sigma lens on it or something like this. ZVE10, yeah. That's what I used to stream with. And then, yeah. Okay. Let's get back to it. That was fun watching the markets die a little bit. Let's go through some of the stories of the day because we haven't even touched on many of these. Okay. We talked about the Kalshi notional volume being made up mostly of Robinhood. Over 50% of the Kalshi volume comes directly from Robinhood already. SoFi crypto is already live. Shopify's Black Friday, Cyber Monday came in up 27% year over year. Revolut, this was a kind of a fun story. They ended up showing off a new security feature on their, like they run a fintech neobank type thing. I thought that this was quite new. You can select trusted areas like home, office, stuff like this. If your phone is ever away from there, it is much, much harder. And they require tons of verification. They limit transaction sizes and stuff like this for transfers. Because a lot of the time what happens is phone thefts are happening, but they're not just happening. People are going into your Revolut or Venmo or something like this, transferring all the money out and then selling the phone as well. So it's sort of a double whammy. You're getting your phone stolen and then you're getting your bank drained. So they are essentially saying if your phone is not in your safe locations, limit transaction sizes. I think that will become a new standard. That's very smart. Vanguard ETF volumes hit $1 billion just within the first 30 minutes of them launching their ability to buy these crypto ETFs. Let's see what else. Obviously, we got the Nvidia stream that we were listening to. We were only about halfway, so I do want to finish that up. But essentially, they said all the work that they're doing with OpenAI and Anthropic and Humane and all of those are not even a part of their $500 billion, future for 2026. So yeah. How come the odds are against SoFi just joining? Sorry, has it been covered? The odds? Are you interested in Coinbase with all of this crypto news? I like Coinbase. I like the products that they make. I like the CEO, but I don't know if it's investable for me right now. I just, yeah, I'm not, definitely not ready to make a decision on Coinbase. Oh, maybe the odds for the S&P. Just bigger companies that need to be entered in. And then two, they don't even need to make a revision. That's the problem. And then they also have sort of a theme of not putting in companies that are newly eligible. Okay, so SoFi has been profitable, but yeah, they have not always been profitable. I don't have a thought on next decade. Thoughts on some cybersecurity names? I love the industry. I just don't know which ones. I'm not well educated, and I find that the industry, for me at least, is a little bit of a black box. It's hard for me to know without really any technical experience what differentiates for businesses, CrowdStrike versus SentinelOne. And I've talked to some of these guys, they just always tell me CrowdStrike's the way to go. But then the valuation also spells that out already. It's not like the same price, and then they go, okay, pick whichever one you believe in. Like there's, the valuation's much different. So how do you weigh the strengths of a CrowdStrike over the weaknesses, but the discount of SentinelOne? And then, Palo Alto, that's another amazing name, or Rubrik, a new incoming name in the space. Like I just find there's so many Yeah, or maybe I just buy an ETF for cybersecurity. That might just be where or what I need to do. Because I do think that if I ever see cybersecurity in someone's portfolio, I'd be like, I get it, totally get it, makes a lot of sense. But it'd be hard for me to follow along. Okay. An intern has gone viral after his job pressured him to give up an Nvidia graphics card he won in a raffle. He later quit and took the Nvidia RTX 5060 series with him. Huh? I mean, it would suck if a company was giving away a product and one of the employees won the raffle. I mean, that does look like a bad thing. You know, imagine, like, I think Amit was doing these things, like these sort of giveaways, and I was like, what if my name comes up? Like, he's definitely not going to give me the giveaway. So at some point there is just like bad looks. But yeah. Rubric is the sneaky play. Honestly, it's the one that I've been looking at the most, probably. But yeah. Should make the course price $420.69, not just $420. Honestly, Jonathan, you know what I'm really thinking about is so one, we've been uploading more and more. I don't want to talk about the course too much because I don't want to be salesy. I'll keep this really light. But I do want to offer the most amount of value for the people who have obviously chose to put their money into something that my name is backed behind. So we're uploading videos still to the course. And what I'm thinking about doing, and I'll just think out loud, I'm not guaranteeing this, but doing daily live streams as well. I think that would be super attractive for people. And especially for the people who have already had the course, if that is of interest to you. My next thing is, what time of day would I even do it? Because obviously I don't want to overlap it with other popular streamers, but I do want to do things that I can't do here on stream. Like maybe bring people onto the stream and do portfolio reviews, take a look at their different holdings, stuff like that. So there are some things where, like, I think there's really interesting content that just wouldn't work on YouTube that might work for a much smaller audience, but of like, more personalized stuff, like going through individual companies, like looking at news reports, stuff like this. Like, no one would want to read an article together, but that might be actually really useful for some. Oh, of course I'm going to do, this stream will never stop. I'm going to do most, like 99% of the stuff is just going to be on YouTube for free, everything like this. But the thing is that people don't realize, like, the problem with YouTube, if I upload something that might be considered boring or not clickbaity or something like this, YouTube will punish the rest of my other videos. You can't dump things on YouTube because then if people don't click through to it, so like I can't talk about Airbnb on YouTube. I can't talk about Shopify. I can't talk about some of these things because, like, to a majority of the audience, that's not useful information. So it hurts me in the algorithm because then YouTube says, okay, that video didn't work, or these two videos in a row didn't work. So that means this third video is probably crap too. So then they'll just push out my stuff to a smaller audience. So where do I put out the content that I think is financially good content? Like these are stocks I'm buying, like Chime, for example. This is a cool name, but it's just not useful information. Make another channel. Yeah, but that's not like, it also needs to be worthwhile for my own time to talk about those things. If 20 people are going to be watching it, then That's not viable. I think you should do more 8 to 10. Yeah, we're going to try to do one video. I have help now. So I have someone working with me since yesterday. December 1st was the first day. So I can be much more focused in terms of the content that I'm doing. So I'm going to do, hopefully, my hope is 2 live streams, 1 video, and then maybe a course live stream as well per day. That's my hope. Okay. But I don't want to sacrifice my health to do that. But I also think like a lot of the background research and stuff like this, I just realized that I can do publicly. You know, we can just read something. We can listen to something. I couldn't believe it. I was just listening to that NVIDIA conference and there was 1,000 people sticking with me listening to Colette speak. The only thing that I would have done differently is that increase the speed to like 1.25 or 1.5x. But I don't want to do that because I know that's not the favorite for everyone. And then the people who are listening afterwards can just speed it up themselves if they want it. So I kind of have to listen to 1x. You'll need a lot more batteries for that. No, the 2 other batteries are charging while I wait. We're good. Yeah, but if I do 1.25x, then you can't slow it down, or it'll look wrong. It'll sound wrong if you try to slow it down. Okay. All right. Yeah. Let's go ahead and, speaking of doing a little bit of this DD live, we're just going to listen to the does that mean we're going to get the after hours show on time now? Well, I think the 7 o'clock stream, I got a lot of people reaching out and saying, hey, you know what? Like this midday stream doesn't work for me. I'm working. Can you go back to doing the 7 o'clock streams? But these ones have also been great too. So the only way to appease you guys is to do both. I'm an outlier. I watch at 2x speed. That's crazy. I like 1.5, but 2x is that's too much for me. I'm a little more smooth brained than that. You're better than me. I can't do that.
Their path of what they need, and I do believe our work with them will never end in terms of engineering to engineering focus as well, as we've been assisting and working with our engineers to do so.
So when you saw them making all these commitments, I think those announcements came out over a couple-week period, maybe it was a month. Did that make you concerned at all about your direct and indirect exposure to them? There was just such a flurry of announcements.
No, I mean, they are an indirect customer through the CSPs, but all of the model makers, most of them are also indirect in terms of error. So we still stand that our CSPs are approximately about 50% or more of our revenue each and every quarter, and has been for quite some time. Now, their work in terms of helping model makers us, and indirectly we support that, is a fine process. All of the capital needs is help being fueled by using in terms of the CSPs.
Great. Let's talk about Vera Rubin for a moment. So the transition to Blackwell Ultra has been very smooth. Can you give us a sneak peek on Vera Rubin and what this ramp could look like, and the potential leap in performance we could see relative to Ultra?
Yeah, so Vera Rubin, we're pleased to say that it has been taped out. We have the chips and are working feverishly right now to get ready for the second half of next year to bring that to market. We're very pleased both with what occurred with Ultra. People comment and say it was seamless, and that's what we wanted. So a seamless transition, very, very helpful for many in their new models that they were creating. And I think you're going to see an X factor increase also with performance as we think about Vera Rubin. So it's right around the corner for the second half of next year. We're very excited for it.
So there was a point at which Jensen, I think, said, even if any competitor offered their product for free, nobody would buy it. And obviously some people are buying from some of your competitors. They're nowhere near the scale that you're at. What's changed? Would you just say that it's, well, look, the market's growing so much that obviously they want to just hedge their risk?
You have to look at kind of a statement that just says the performance and the overall use of NVIDIA's ability to create full systems that can accomplish any type of workload, any place, any type of model is quite unique and what it has been designed. The concept that a fixed function type of product would be able to do something similar to that leads them down the path that just says, you can take it for free and you may not benefit from that. And that's what he sees, and that's what we all see in this. It's very important as they think through not just what they need to do to build the model. They have the ability to not only train in terms of the model, but complete a full inferencing, all on the same type of architecture, each part of that being designed to do so. Being able to scale at many different aspects and scaling up has been extremely important, and NVLink's important to do that, all for the model making that is happening right now. So once you move from that training and you want to go into the inferencing, again, you talk about a full system that has been engineered for inferencing with all of the different focus in terms of the networking that is going to be necessary to make sure traffic and otherwise is happening quite well. Now, we see that today, and it's not just about day one, but that is about your full time using that from an inferencing. Remember, power efficiency is also extremely, extremely important from the inferencing standpoint. So co-designing everything that we did there, it's very hard to think about a very simple chip, fixed function chip would be able to do that. And that's why many stay on that platform doing both. You have the capabilities to do all those different pieces together.
Let's just talk for a second about CPX. I get a lot of questions on this, and I still think that people don't really get how important CPX is. And this is the first time where you're taking a workload and you're breaking it up. It's not an ASIC per se, but it's an approach. It's an ASIC-like approach to a workload. So can you talk about CPX and whether there are more workloads? You know, how ubiquitous that approach could be?
There is a need for breaking down, whether it be the training or breaking down the inferencing through there. You're going to have many different types of inferencing requests and needs. So CPX takes you to a different stage within the same infrastructure to get that done. The concept that you would have multiple different infrastructures working at the same time to accomplish that. This is everything that you would think about in terms of the world of a mixture of experts. This is the key piece right now that is very important in terms of the model builders that are right now. All of it is based on how did you design your work in terms of with those experts. And that takes some very important amount of compute that is able to complete not only a full model, but each one of the experts. So they're breaking that down, but not necessarily break it down that says you can use a different type of compute to do that. Staying full on that full system is probably the most efficient way to get that done.
Let's talk about software for a moment. There's this argument that some people have that because you can program now in AI, that somehow AI will itself break down your mode in CUDA, that it will allow somebody to build a platform faster that could approximate what CUDA does. How would you respond to that?
CUDA is a very long-standing and important development platform that has been with us for several generations, and we're probably on our 13th version of it. The important part of that is not only CUDA, the development platform, but the consistent libraries for all different types of industries, all different types of workloads. The way you want to think about those libraries and work, you're usually generally providing them at least the first 100 lines of code or help that you can go and do. So starting with that, an important group is going to be the enterprises. It is going to be in terms of those that are building for themselves and have some ability to do that. Not everyone's going to be staffed with software engineers.
Do you guys want to listen to Trump? I think he's talking about savings accounts, which could be interesting. Okay, let's have a listen. Oh, sorry.
Put that in 12 to 14 bills. I said, I don't know if we can hold it that long with the Democrats. And we said, let's try doing it once. So we did, and people were surprised, but we got it done. So I congratulate you guys. Amazing job. Under that bill, the federal government will also automatically be making a one-time seed contribution of $1,000 into the tax-deferred Trump accounts for every newborn U.S. citizen, fulfilling a promise I made in the 2024 campaign. Trump accounts should grow to be worth many thousands of dollars by the time the child is 18 and even more by the time they are 20 or even 30 years old. We think it's going to be something really unique and really special. We hope many others will follow Michael and Susan's example and make their own contributions. I'll be doing it too, to the next generation, including businesses, churches, philanthropists, family members, and parents themselves. I think we're going to have a lot of people, Susan. I think a lot of people are going to be contribute. A lot of people are watching us right now. They might not be $6 billion plus, but there'll be a lot. There aren't too many people that are in the 6 billion range.
Do we need to go back? I think there were some people saying that he referred to Kevin Hassett as the next Fed chair.
Money in their wills, so that's very important. And as you watch us today, I hope you'll be doing that. Contributions to Trump accounts will also be a great benefit for employers to offer their workers, which they'll be able to do tax-free. It's tax-free. We expect hundreds of major companies to announce plans to contribute to these accounts in the coming months. And we've had tremendous interest in that regard. So the Trump accounts will be available starting on July 4th next year. And Michael and Susan, to you again, it's an amazing act of just incredible everything. I mean, the life you've led to be able to do this, even to be able to, even a lot of people have a good heart, but they can't give $6.25 billion. And Michael, probably knowing you, it's not the last of it either. It's not the last. But on behalf of the United States of America, I want to thank you both. And I want to thank all three. But I want to thank you both because you've been friends of mine. And it's a spectacular couple. This is really an amazing people. These are unique. And I'd like to have you come up and say a couple of words and tell us what you have in mind, because what you have in mind is good. Thank you very much. Thank you.
Thank you, sir. Thank you, Mr. President. It's a great honor to be with you here in the White House. And, you know, when you passed the Invest America Act on July 4th of this year, we were really inspired to see that happen. And this is something that, you know, Brad had first mentioned to us in 2021. We thought it was a great idea then. And it's amazing that it happened. And we also saw that this act would become a platform. And, you know, we believe the smartest investment that we can make is an investment in children. And this act has created a platform for families and friends and communities and companies and philanthropists to contribute to these accounts to create a savings and opportunity and hope and prosperity for tens of millions of children in this country. And Susan and I are super excited to announce our $6.25 billion gift to 25 million American children, 10 and under, and our gift will cover most of the children that are 10 and under that are not part of the federal program, the 0 to 2-year-olds, and who also live in zip codes where the median income is $150,000 or less. And I have spoken with a number of other wealthy Americans, philanthropists, and we are confident that others will join us because we all understand the incredible impact that a gift like this can have on the lives of young Americans. So again, it's a great honor for us to be here to be able to announce this. You know, when I was 8 years old, I got a passbook savings account and I had, I think about $8 in it. And you go to the savings and loan and you give them a quarter and they'd stamp your account. And I got to see the power of compound interest early in my life. And that has brought me here to this moment. And hopefully will inspire that kind of opportunity for many more young people in this country. So again, thank you for the privilege of being here.
Thank you. Thank you, Susan. So beautiful. Thank you very much. Susan, would you like to say something?
I'd just like to say how excited we are to be a part of this. We believe that when children have a future that they can see is worth saving for, then that will help build hope and opportunity and prosperity for generations to come. So we're so excited to be doing this and hope to have many people join in our efforts. Thank you so much.
Thank you, Susan. So beautiful.
Well, first, it's an incredible honor to be here, and we wouldn't be here without the passage of the Invest America Act. And everybody on up here today played a role in getting that done. The Speaker, Ted Cruz, in drafting the legislation so that when the president placed the call to the Speaker and said, let's make this happen in the big, beautiful bill, Congress was ready to act. They had the legislation drafted. But I couldn't be more grateful for the friendship and the partnership of the Dells that really show the best of America. Today is Giving Tuesday, right? And the fact of the matter is, for decades, we've talked about the wealth gap. We've talked about too many people left out and left behind. This president was elected on a Main Street agenda to get the rest of America into the game. And that's exactly what this does. It gets every American child, 3.7 million children born every year, will now start life off with an investment account, seeded with $1,000. And then you're going to have great philanthropists, great Americans like Michael and Susan, who are going to add money to those accounts. We're overwhelmed with the number of companies that want to contribute to these accounts. Already companies from Uber to Nvidia, T-Mobile to Charter Communications, Dell, et cetera, the list goes on. And every day more companies are calling us, raising their hands and saying, we want to be part of this. It's like a 401k from birth. It's a benefit for the kids of our employees, right? Major philanthropists. But I think what this is going to unlock is the power of families. Moms and dads Venmoing and Apple Paying and $5, $10, right? In getting these kids into the game. When we had the roundtable at the White House earlier this year, Dara Khosrowshahi, the CEO of Uber, said, you know, after fleeing Iran at the age of 9 with nothing, he came to America because it was the land of hope. And he said, what the Invest America Act does is it bottles up hope for every child in America. Whether you're in rural Mississippi or rural Indiana, where I came from, inner city Trenton or Compton, you're now in the game, right? That act alone, I think, reinvigorates the American dream. It reinvigorates the idea of free market capitalism. Too many people are losing faith in you, sir. By passing the Invest America Act and getting all these kids into the game, this is a transformational act in this country forevermore. Every child starts off life in the game with a piece of the American dream compounding in the upside of America. So thank you for having us here.
I think the secretary first. I defer to the brains.
Good afternoon, everyone. And I think this is a major change in philanthropy and for American working families. It is the merging of President Trump's agenda of parallel prosperity, Main Street meets Wall Street. For the next 5 years, every child born in the US will get a $1,000 Trump account that will be with them and compound for the next 18 years. Treasury Department with other branches of government is going to do financial literacy, and we are going to make sure that all American families have a stake in the success of the United States of America. So every day when the stock market goes up or down, and we believe over the 18 years it will go up, and families will learn the power of compounding, that it will be a game changer. People who have a stake in the system and become more and more vested in the system, they do not want to bring down the system. They want to make it better. So I think we will look back on today and know that these Trump accounts, they have started a new age of the capitalism and market interest for the whole country. I also think that it is a game changer, as we're seeing with Michael and Susan Bell today, that Americans are the most generous people in the history of the world, and the Trump accounts will provide a vehicle for philanthropists such as Michael and Susan and many more to contribute. And at Treasury, we are working, so Michael and Susan want to do it for children born in the past 10 years, a certain income level. As Brad said, it can be tailored, it can be to employees. It could be a philanthropist could adopt a state, they can adopt a school, they can adopt a zip code, they can adopt a street. And so we will constantly see these accounts be topped up. For those of you on the Treasury, will be running this on the operational side. For those of you who would like to, you can go to trumpaccounts.gov today and see the homepage that has a basic outline. These will become operational on July 5th of this year. And we will have families start signing up for them. So, and that homepage will answer all the questions on eligibility and investments. And then finally, today we're here on Giving Tuesday. Michael and Susan have led the way, but I think that there's a chance that every Tuesday can become Giving Tuesday as more and more philanthropists see the power of this, of giving to American families, giving to American children, and giving everyone a stake in our great economy. So thank you very much.
I'll be brief. There's a lot of symbolism here today. Right here on the eve of the 250th anniversary of the greatest nation in the history of the world. We are the greatest nation by any objective measure. We're the most free, most powerful, most successful, and most benevolent nation that's ever been. And I think what you're seeing here is another exhibit of that. This idea, this vision came about because Brad and a couple of smart guys came up with this idea and then took a few years to sell the idea to everybody. And then these visionary legislators over here, Senator Ted Cruz and Blake Moore in the House and Jason Smith, the Ways and Means Chair, really caught the vision. And we put it into the big, beautiful bill, the Working Families Tax Cut. We've been saying all along that was drafted to really help lower and middle class earners in America. And this is one of the great features. One of the perils of having the big, beautiful bill and having it all in there together, the president and I have talked about many times, is that there's so many great things in that legislation, we don't have enough time to talk about all of it. So we need a moment to really focus on this. Giving Tuesday is a perfect time to do it. And it's absolutely perfect, I think, that July 5th becomes the operational date right after the nation's birthday. So what we're going to see here is a model that I don't think anyone has done anywhere in the world. They wouldn't have the capability to do it. They wouldn't have philanthropists and great Americans with big hearts like this who've earned their way and really fulfilled the American dream. And they have a vision and a desire for more and more people to do that. And so now more and more Americans will. It kind of evens the playing field in a way, right? And everybody has an opportunity. So we're just excited to be a part of it, grateful to the vision, grateful to a president who leads from the front, who understands the potential of something like this. And this will be one of the many marquee achievements of the Trump administration. This will be one that people remember for a long, long time. And I think it can change the country. So thanks, Mr. President. Thanks, Brad, all of you for being a part. Thank you to the Dells. Really amazing. Thank you. Sure.
Thank you.
Well, I want to congratulate all the men and women up here. And Mr. President, I think objectively on the merits, the case can be made that there has never been a president who's had a greater positive impact on the children of America than you have. And in particular, in this one big, beautiful bill, I think the two most long-lasting and far-reaching provisions are, number one, the school choice provision that you signed into law that is going to unleash tens of billions of dollars to scholarships to low-income kids all over the country and is going to change the lives of millions of kids. And the second provision is this provision right here, the Trump accounts. These Trump accounts, starting on July 4th, every child in America will have a personal investment account opened for them. Newborn children will have it seeded with $1,000. Parents and family and employers can contribute up to $5,000 a year in a tax-advantaged account. That money will be invested in the S&P 500 in the stock market, broad-based equity index account. Two massive benefits that change this country. Number one, every child in America will experience the benefits of compound growth. Take a little girl born next year. She's born next year. She has the account opened for her. $1,000 is automatically seeded. Her parents, her family, or an employer puts $5,000 a year each year into that account. If you assume the historic rate of growth of the S&P 500, which is 7% a year, by the time that little girl is 18, she will have $170,000 in that account. And if she keeps saving, By the time that little girl is 35, she will have $700,000 in that account. That is game changing. And we're not talking the children of Michael and Susan Dell, the children of Donald Trump, the children of people of great success. We're talking the kids of a single mom waiting tables who could have $700,000 saved by the time she's 35 to get an education, to start a business, to buy a house. That changes their whole lives. But the second benefit, and what I'm really excited about, is we are creating a new generation of capitalists. Every child in America is going to be an owner of the biggest employers in this country. We've all seen the sad statistics of how many kids are losing faith in capitalism. Well, 10 years from now, a little boy is going to pull out his phone and he's going to look at his app and he's going to see his Trump account. And instead of thinking of big, bad, scary corporations, that little boy is going to say, I own $50 of Apple. I own $100 of Dell. I own $75 of McDonald's. And every child is an owner of the biggest employers in this country. That will transform this country. Mr. President, thank you for signing it. Let me say, Brad, this would not be a law if Brad Gerstner did not pursue it with absolute dogged determination, relentless. I've gotten calls and texts from Brad at 6 a.m. and at 2 a.m. You may sleep less than the president, Brad, and that is a remarkable thing because I don't think he sleeps at all. And finally, I'll just say to Michael and Susan, incredible Texans, $6.25 billion is extraordinarily generous. Let me say, on behalf of 25 million kids who just got a gift from Michael and Susan, and it's not a gift of a video game, it's not a gift of a bicycle, it's an investment in their future. That changes their lives, and I hope and believe Michael and Susan are going to inspire millions across the country to do the same thing. When Congress passed Section 401k of the ERISA, I don't know that anyone realized how much it would change retirement plans. There's now trillions of dollars in 401k plans. They're going to be trillions of dollars in these. These are 401ks for kids. And Mr. President, these Trump accounts exist because you signed them. Thank you for your leadership. It's an honor to work with you.
I mean, that got me pretty excited.
Perfect. Thank you. First, I would just want to thank Michael and Susan for the kind gift. What you all have done will be transformational for 25 million kids. And a lot of people we can thank for the provisions in this big, beautiful bill, but there is no one to thank greater than President Donald Trump. And I'll tell you this, out of
Real quick, before we listen to that, there's way more important things that ended up happening during that, right at the beginning where we ended up missing. Let's listen to this really quick.
It's a great group. And I guess a potential Fed chair is here too. I don't know.
I think a potential Fed chair is here today.
Are we allowed to say that? Potential.
Everyone looked over that way. Sorry, to Donald Trump's left.
He's a respected person, that I can tell you. Thank you, Kevin.
Thank you, Kevin.
Respected person, that I can tell you. Thank you, Kevin.
It is a bit low. I apologize. This clip was not my clip, but it's full blast. He says, the potential Fed chair is here today. I don't know if I can say his name, and then ends up saying, thank you, Kevin, at the end.
Are we allowed to say that? Potential. He's a respected person, that I can tell you.
He's a respected person.
Today is...
Anyway, thank you, Kevin, is what he ended up out. What I think is so crazy about that is he literally said that. And the odds of Kevin Hassett went up by 1 point. Okay, 3 points now. How is that not moving on that report? Like, I would place the odds at like 95%. Yeah, Kevin Hassett. He's talking about Kevin Hassett. Kevin McAllister. So, well, Kevin Warsh wasn't in that room. Kevin Hassett's in the room. And yet the prediction markets still put, Christopher Waller at 5%, Rick Reed at Reader at 2%, Scott Bessent at 6%. If it's one of the Kevins, let's say Kevin Warsh is there for some reason, hiding behind somebody. I don't know. But no, the only person in that room is Kevin Hassett. Okay.
Works. They want to go out and make a living for themselves, because maybe it's going to be a lot more than we think, or maybe it's not going to be quite as much as we think, depending on what happens with the world and the market. We'll try and do very well in that regard too, but there's a lot of learning to be done, and I think this is a big step forward.
And your reaction, did either of you say, you're donating how much?
Yeah, we already said it's $6.25 million.
No, I mean, what was the reaction between the two of you? Someone came up with the idea.
Oh, sure. Oh, well, so we kind of started with a smaller amount, to be honest. And we started talking about Texas only at the beginning.
And adopting the state of Texas.
Right. And then we thought about it some more, and we thought
Got pretty excited about the idea.
Yep, and we went back and forth, and as we do on these things, and we
got
ended
more
up
and more excited, and next thing
this
you know,
is where we ended up. So, but
The number
a
kept climbing.
lot of discussion and consideration over a long period of time.
Yeah.
I
mean,
to
we
come to this,
believe
and
this
we feel
is
great about it.
the greatest investment that we could possibly make is in children, and we've been investing in children for over 26 years with our foundation.
Yeah, and there are 30 states already that require at least one semester of financial literacy, and hopefully all 50 states will do that. And as children begin to understand that they have these accounts, that creates a real need for our schools, our parents, our community organizations to really begin to grow financial literacy in the country, which can only be a good thing.
It's really an amazing moment.
I do think, I love the plans. I think it's great. Some of the stuff about how much money these accounts are going to balloon into, I think is a little bit I don't know. Past performance does not indicate future performance. It's like day one of financials, just because the stock markets have been averaging at a certain point doesn't mean that's where it's going to be going forward. But yeah, it is still exciting. Obviously, a lot of the fintechs do benefit if we're sort of jump-starting the younger generation. And the younger generation does not want to work with their parents' financial advisor. They want to work on those things. And if Michael Dell and Susan Dell want to invest in children, cool. I mean, a lot of the elites have been investing in children. The whole Epstein files was about that. All right, that was a joke. I'm kidding. Very generous of them. Lovely. But yeah. Let's go ahead and take a last look at the stock market, and then we'll wrap it up. Okay. Bro's about to get canceled. How am I going to get canceled? I didn't do it. I was at home. I didn't go to the island. Go cancel them. Don't cancel me. Okay. MongoDB up 22.5%. Bitmine up 11.2%. Nvidia essentially flat on the day, up nearly 1%. Meta up 1%. Let's take a look at the SPYs and the Qs. SPY up 0.3, decent. I mean, we like positive days. Qs up 0.9, more than Nvidia. That's hard to do with Nvidia in your index being by far the heaviest weighting. IREN down 11%. Celsius down 3.8%, TeraWolf down 3.5%. Beyond Meat holding up pretty well after pumping a ton. That's pretty exciting. AMD down a little bit. No, I'm not going to stay into market close. I'm going to let Amit do his thing. I'm going to try to make another BMNR video. I said dilution. I put a video out and said, I was talking about how much they're raising, right? They're raising so much capital right now. But I use the word dilution because that's just what I grew up on. Like, you are diluting your amount of ownership in the business. That's just a fact. Okay. However, if you go and take that money that they raised and then immediately buy an asset that's worth essentially 1-to-1 of what they diluted from, then it's not really dilution. You're not like, if your ownership in the company gets cut in half, but the assets of the business double, well, you're holding about the same net worth of things. So it is dilution, but really it's just equals out. So I almost want to make another video today just to sort of straighten out that, like, I do mean capital raises. We're seeing a massive explosion of raises, but it's not a bad thing. I didn't mean to try to highlight it in a bad way. BMNR is just betting a lot on Ethereum right now. Obviously, that's what they do. But yeah. Chime is holding $22 for another day. Yeah, I think we'll see it back in the 30s soon. Like, don't bet on that, but that's just my feeling. Hassett is at 83-cent contracts on Robinhood. Still seems low to me. I mean, he said he's in the room. Thank you, Kevin. Like, I don't know. Maybe it's anyone. Okay. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. Subscribe if you want to see more content like this. Bye for now.